morning. Good morning. Alright. Get that out of my system. Good morning, damn it. Alright. I'm actually just looking for an anime to watch, honestly. Let's look at charts. So what's happening here? Well, there is no real place we want. Like, oh, let me take a trade this morning. Let me quickly take a trade this morning. Nah, we don't really have any of that. Let me adjust these though. Starting from this day. One, no. Two, three. That should be it. Should be it. We gotta wait till 7:55 before we place our trades. Ideally, you know. Crazy. One Piece is still going, bro. Bruh, crazy. Ah, Boruto got freaking 5.71 rating. Nobody likes you, Boruto. Yeah, yeah. All Naruto fans just, not all, but most OG Naruto fans just immediately hated Boruto. What do you mean you're gonna continue Naruto? What do you mean, Boruto? Whose man is this? Get this guy out of here. Don't, don't make me repeat myself. Maybe I should go watch Boruto. I don't know though. Boruto just seems like nah, those are kids, man. Naruto was a kid when we were kids, so he made it okay. Naruto was a kid when we were kids. Naruto grew up with us. Naruto was with us. We grew up together year by year. We grew up year by year. Year by year. And then Boruto comes like, what? Hey, calm down. I don't watch kids anime. I don't watch kids anime, bro. What are you talking about? Boruto. This guy here. Don't even try to. They should. Nah, nah. Maybe a movie. Just like, oh, this is how Boruto is doing now. And that's fine. Done. Simple. End. The only one I can watch really is Bleach, I guess. I don't know why I never finished Bleach. I don't know, it just wasn't like our boy Naruto, it wasn't. I don't know, Bleach was different. It was honestly, I'd say the biggest factor with Naruto versus Bleach is the growth in Naruto. Like it felt like you were growing with Naruto. It felt as though there was that change of age and physical appearance and maturity and growth in strength of his powers. Bleach almost just Ichigo looks the same basically the whole time. He just started off basically almost strong, increased his powers little by little, but he didn't seem as though he grew much. Mans was already tall. He was already as tall as he could be, and then they just made episodes upon that. I think that's also another reason why Gintama is not. I don't know if you're gonna make that many episodes. Even Dragon Ball Z did the same thing. They grew up. You gotta grow. You're gonna make that many episodes. There has to be some sort of growth. Bleach out here just the same guy over and over. Whose man is this? Crazy. The same guy. Yeah, you can say he grew up a little, but his growth is so negligible. Bum bum biyum, bum bum biyum, bum 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 biyum, bum bum biyum. Da 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 da. One more candle and then we dance. The blues advance. Tu, 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 tu. Blues will have power forever. 40 minutes. I got a lot of catching up to do on these These animals. This season's anime is a bunch of season 2s coming out. How many episodes are we gonna have? 24 episodes. Oof. Vinland Saga, I gotta wait till end of spring to watch it, so I have to wait till April, May, June. I have to wait till June to July basically to watch it. 24 episodes. Mappa. Vinland Saga though. Oof. Shit. Somebody call it Peakland Saga. Chainsaw Man just I know. Shit just there, man. Alright. Let us look at this chart here. It's about 2 minutes till we got a trade. We know there was this box from yesterday. Price is struggling to break it. barely any volume today, to be very honest with you, but we are moving up. We say we want to see our price interacts here at the lows. At least 5 is down here. So if we come to this, it's about 3.5, so 7.5, make that 8. So just put that below yesterday's low, 8.5. Ideally, we want to see price come here, and that place wants to see price come too. There is enough volume to the downside to not say there is no volume on the downside. You know what I'm saying? Couple of rejections as price was going up. So this is what I wanted to see price reject from, and price is rejecting from there. Could have been a short there. Next place of interest would be here. Let me just put this over here. Ideally, it's up here too. So from this area, I want to see how price interacts. But right now, I'm thinking first of all, we gotta wait till price gets to this point, right? So I'm thinking we wait for a couple of different, like another candle, because this may be the rundown for this rejection. I say we wait for another candle to close. If that candle closes, we can see it and be like, oh, okay, if there's rejection in here, then we'll know that, well, price wants to reject this, because this is today's low. It's low right here. So our next interest would be seeing how price interacts up here. So something like this. Using that high, at least 5. Might as well risk above that point there. So there's 2 hours on this here. There you go. If this breaks the low, then we'll have to wait for price to come lower. Come lower and show where it wants to really reject from. So like I said, if I was going to trade earlier today, this was a nice entry for the short using this high. So you basically be using about this same high that I'm risking right here. So technically you'll be waiting for price to get here, which is around where I want price to come to for my long too. So now that price has broken this low, we're gonna have to wait for a couple of candles to decide where price wants to go. yesterday's low is a fair point for price to go to. Ideally, the red line shows some rejection, and we can use this low for a pushback because we got a push from here. We may be able to get another push. But yeah. I think maybe it won't be that risk, so maybe about 2 averages here. Yeah, sounds about right. Alright. I think price is gonna come to yesterday's low. And I think a lot of people on this short are going to take profit down there. So let me just drag this here, put it at yesterday's low. About the same length is this. Because I was not supposed to use this low, so 4 under that low would be 10, 11. So we'll be looking for 2R, which will be up here. But ideally, one price come down here, so if price does come down there, then we just need to know by how much we're going further down. So 4. So it's reduced by 4. How does that do it? It was by 4.5, I guess. That's fine. We could find a bounce inside this whole movement, but I think we get to this low, so we'll see. Thankfully, we didn't really create any structure on the way down, so if we do bounce back up, we have a clean way to the top, clean road to the top. Ban cart. Man, bleach, yo. I don't know. I don't know. Alright, so that's price coming to yesterday's low. We have good resistance in here. I don't think price gets. I want price to get down here, but I don't think it does. I think price bounces in here. So let us see with our eyes what truly would happen. Perfect. I said I like it like that. So entry here, risking this low, but at least 5 below. So if it was at least 5 below, 4 below. So 6, as well risk 7, which is 5 below. 5 below that low. That is it. Price closes with some good strength. We're looking for a bounce because that was a big move relative. If price breaks this low though, it'll be iffy if we want to join this anymore. So ideally price should not break this low. Oh, it broke it. It broke it. It broke it. So given that price broke it, it's a little iffy. Do I want to take this trade? There is no resistance on the way back up, other than, yesterday's low, blue line, red line. Other than all of those resistance, there is not, much price action resistance on the way back up. I don't know. It broke it by a tad bit though. No, but I still broke it. Still broke it. Yeah. I mean, if the rejection is a lot, maybe I'll just get in. Maybe I'll risk now so I'll just risk 10. So yeah, I think I'll just risk 10. 10, which is gonna be, there was 2, so 8 from there. Right, so 10. 10 is what we risk. So our TP is quite a bit higher now. Oh, it's actually here. Just higher there. Oh, pretty fine. We're pretty fine. Whatever. I was just getting there. I was trying to wait for price to. The spread is kind of annoying, but it is what it is. It is what it is. Instead of 10, we're risking 112. Can you imagine that? Can you imagine that? Spread is very annoying. Very, very annoying. This spread will literally cause me. I need to get over it. I need to get over it because it will cause me to miss trades. And it will cause me to. Yeah, I think the only thing is gonna cause me to miss trades if I don't get over it. Because I wait. I don't need to waiting like that. It's crazy. So another thing, the price broke. It keeps breaking down. So it broke down, pushed up, broke down, pushed up. So I'm expecting this breakdown to push up. But hey, we'll see. I don't like the fact that the volume is not all that, but we're taking it off of this, so that's what makes it okay. But this spread will not kill me, man. Then you're getting out of the trade and then waiting for volume to come. It's what I'm thinking about, but I'm not going to get out for a loss because I'm not that what's the word? concerned about the trade. Like, I think it's still an okay trade, but I want volume to come in. Given just because we broke the low. We have some very good rejections from here, so we're still very good. But I still want volume to come in. Volume to come in and then a pullback, and then we'll get it. Let me see. Well, at least we got what we saw here this time. I thought it would be break even. I did not think it would be red, because it would mean that freaking this broker wants to fight with me. That's what it means. But yeah, let's just see volume coming, and then we'll get a pullback. I do think it's gonna bounce based off of the characteristic of price. So what it did was, so we had the low yesterday. It broke the low, bounced up, right? Came down, broke the low, volume up, came back. So we're looking for this kind of volume up and retest. Unfortunately, this one broke the low and just went straight up, right? And that may happen here because there is no rejection on the way up. There is no, but we could also just get the volume that we want to see first, and then what's it called? And then a pullback. We enter on the pullback, and everything's gonna be all right, kind of thing. So something like this. So in this case here, if we had gotten in on pullback, we're risking 4 below the pullback, which we would have not gotten stopped out at. I hope. Spread is a different matter. Me and spread, you can see our relationship is very it's very toxic. Lots and lots and lots of friction in our relationship, me and spread. So every little thing is gonna be alright. One love. Let's get together and be alright. Let's get together and smoke some weed. I don't smoke though, so I don't know who you're getting together with. So that's the volume we're looking for. Should I have stayed in my trade? Like I said, I wasn't afraid of the trade. I just wanted to see the volume, see it with my own eyes first before getting in. So now we just need a pullback, and like I said, there may not be a pullback. Very well may not be a pullback. Interesting. I wonder why price is doing that. I wonder why it's breaking the lows too. I guess it's liquidity grabbing. Break the low, grab liquidity, push back up. Break the low, grab liquidity, push back up. Break the low, grab liquidity, push back. That's why I reached 4 below the low. You see, I didn't get stopped out. Even 4 below this one would not have stopped us out. See, we would have been fine, or we even reached 10. So we reached like 8 below the low this time around because price broke the low within the candle we wanted to get in at. There's not much spread when we're trying to go short though. So when we're trying to go long, there's a spread. It's crazy. There's basically zero spread when we're trying to go short. Basically zero spread. I have like 1 pip spread. 1 whole pip, bro. 1 whole pip. That's like 10 pips. No, 0.1. No. It's 1 pip, man. What are you talking about? But that's not like 10 pips. Yeah, that's 1 pip, which is like 10 pips for us, but this is 10 pips, which is 100. So I was confused a little. But yeah, so we have 1 pip spread, bro. Crazy. Crazy. A whole pip, bro. Like you can see the space so clearly. Very, very discouraging. Very, very discouraging. Whatever. So now we're just waiting for our pullback. Pull back, pull back, pull back, pull back. Pulling back, pulling back, pulling back. Woo! Where is the rejection, bro? Like, are you serious? Hello? I hate these ones. Now it's going to go one blue candle again. Can you just chill? I need two candles of rejection. And two candles of rejection. Can you give me that? Shouldn't be breaking this low here. Like if it breaks this low, I'm done. I'm done with going long here. I am done with going long. Should not break this low. Should not, must not, thou shalt not, never, nope, cannot. Happens, forget about this trade. Ah, it's testing me. Saying what's the worst I can do? I should do my worst. I will not trade you. I will not trade. God, this is a characteristic that is foreign to me. It is not like, this just broke the low once, game simple. Form structure. This game broke the low again, simple form structure. If I waited for this second candle, I could have taken it there, but again, we're already trading the day, so I'm like, yeah, let's wait for volume. So volume came in, let's wait for a pullback. Pullback came in, and it ain't it. It's not what we expected. So out of this trade, we're not taking this trade. I don't know what the hell's forming here, but that's for sure another high. So the high is here. And there's gonna be above the high at least 5. So above the high candle is here, at least 5. 5 is here. Now let's just risk above that blue candle. So that'll be the risk for this short if price comes back up to that point. Though if price is able to come up to that point, it's like it's probably going to be a good it's probably going to take some good volume. So we'll see what price wants to do. Price today is trading weird, and let us not be in front of it. Now while we're going long, we're definitely going to need some volume and then a pullback. Then we can go in long. Let's just drink some tea. I'll decide when I have money, I'll go back home and find myself a tailor back home. Take some business back home, Have this tailor make me my suits, custom made suits. Cause I'm mostly gonna wearing suits, and um, casual style suits too, or casual business casual. Can't remember what it was back then when we used to wear clothes. Now I don't wear clothes anymore, so I don't remember the names of the styles. Now I just walk around the house freaking with a onesie and a robe. That's all I wear. And then maybe sometimes I wear my hoodie and I go to the gym. Alright. Let me see, my brother is trading. I wonder how he's trading this. we can consider this to be a little bit of volume. Yeah, sure. So if price comes down to this area, have to reach 4 below this. So 8.75 plus 4 is 12.75. So 13. So it'll be around here. Somewhere around here is where we wanna find our trade. Ideally, but it may not be where we find our trade. We may find it somewhere earlier or something, you know. We still have this one. Just risking right above that candle for this short. And so for this, risking 5 below or something. Still waiting to see how price interacts with our line for the short if it goes up there first. Obviously, we know that price should not be breaking this high. If he wants us to go in short, you know what I'm saying? Don't be doing stupid shit like that. So risking right above there. 7, 6, 5, 4, 3, 2. What about short? I mean, short there. Price, this is good, very good volume. It may continue, who knows, but expect price to come down to this area. I want to see how price interacts here, and then we'll hedge. I think we'll just hedge instead of switching. We'll just hedge, but we'll see how price interacts. Let's wait. So what's happening here is price may end up forming some kind of base here and then pop up, and that would be unfortunate. But it is what it is. To be honest, it is what it is. We could still get some miraculous candle that just drops like a rock, and we get our hedge somewhere in here. But yeah, if we get a base form here and then price pops up, holding for after that base forms, well, like I said, it is what it is. To be honest, it's not the type of base that we like yet. So we could get a black candle and then a push back up, and then maybe a pull back and then same candle push back up. But we'll see what happens. Let the market give you what the market wants to give you. I forget the saying, but there's a saying I've heard before. All right. To be honest, it would have been nice if this base forms and breaks to the downside, but the base that's forming here looks very, very bullish. Very bullish. It hurts me to know I may lose soon. Ah, but it's all good. It is what it is. Because if I do close the trade right now, oh, I'm preventing a foreseen loss, but that foreseen loss is not guaranteed, you know. So what's the point? Hmm. It's kind of annoying though. Like I'm not even. I feel nothing if price is coming down like this, cause all I can think of shit. The price is likely to form a base here, so it could bounce there. Then there's yesterday's low right underneath it, and then there's the red line too. So price has to go 1 pip below my entry for me to be in for me to be in breaking. It's crazy. The more I trade, the more I hate spread. Maybe when I have enough money, I'll do something about that. You guys stop messing with me. Like I don't mind paying commissions for no spread. I really don't mind paying commissions. I truly don't. Just give me good spread. That's all I ask. I'll wait for this guy to close and see what the hell he wants to do. Yep, yesterday's low. And then the challenge platform, the 5%ers, they charge commission and spread. Choose one, bruv. That's just pure greed at its finest. Are you serious? Commissions and the spread is just as horrible as this. A little bit even worse. That's just wrong. So many ways. It's just wrong. That's just disgusting. Ugh. Like, at least when I was trading penny stocks, it was only commissions. I never really had to deal with spread unless maybe it was a really, really volatile stock. Volatile penny stock. Maybe one of maybe they had a dollar value, the not necessarily they had the dollar value, the more the spread is more how volatile it is really. So that's understandable. What the SPY is one of the least volatile things out there. Why am I suffering like this? Why? Why am I suffering like this? If you're gonna charge me commissions, at least let me get zero spread or maybe 0.1. Come on. That challenge account is just rude. Absolutely rude. Now we're at the red line, like so. Makes sense. Makes sense. We're getting some rejection here. This is ideally where one price come to, but I don't think price gonna get there. My TP is literally under here. Probably under right there. Right around there. For this trade. But it's a little bit lower than this in the platform. Because, there's that thing called spread. Craziest thing, bro. It's the craziest thing. Spread? Oh my god. It's crazy, bro. It's crazy. I have a dream that someday this nation will rise up, any of its cause. Oh yeah. Is he going to find support here? Looks like. He wants to find support here. Don't like that though, but looks like that's what's happening. It's a little far from the lows. But sure as hell is strong. Ooh, even close blue. Yeet. Yeet. Oh well, we'll keep holding this trade. I don't see a reason for us to like yeah, sure, we could find support at the red line and whatnot, but still a little far from the lows. And there is the base that's up there, but I guess the base is not really. We don't really care about the base like that. It's more this point here. Oh, more at this point here. So we need to see how price interacts here at the high. So there's a high that formed there, but the high also didn't. There's not much downside to the high, so there's not much downside movement to the high. So it's not as though it's not that relevant yet, unless we get some kind of trade here and then eventually a drop, and that would make this more relevant. But until then, I guess I see it really could just bounce here, trade, maybe pull back with rejection. On that pullback, we have rejection. I'll have to get out of my short. However, up until we get a trade and then pullback, maybe, and then a continuation, I am not interested in getting out my short. I'd much rather take the loss. That is the resolve I have come to. Resolve. A man of valor. I don't even watch it. Ichigo. Ichigo. All right, so what's happening here? Like I said, so this I think I'll have to get out of the trade. It looks a little bit. It looks like it wants to bounce from this area, so we'll have to get out of this trade. Is what I'm thinking. Let's see how this closes though. Hmm. That's annoying. Price is literally at my entry price right now. There you go. Alright, -7. Oh, -5. Nice. Alright, so out of that trade, let us see what price wants to do. I don't think we're going long yet though, because the prior candle was still bearish. This was bearish, so this is bullish. Well, we may get a blue candle and then a continuation, right? That's why I'm going out now. Otherwise, you'd want to wait, maybe want to wait and see what price does. But with this amount of resistance here or support here, we may close blue and then maybe get a pullback, and in the same candle we get it pushed out of this base back up to these highs. So given that that is the theory, maybe looking for a trade here, and I'll have to risk there. If we don't get an entry to the long side, that's fine, to be honest. That's quite fine. We'll look for a short up here. But given this structure, I think if price comes here, it's likely to break it. So we'll be very careful if we're going to get in short, especially if it's our only trade. We have to be quite careful. But there was a drop there though, so price will likely respect it, but still have to be very careful. And after here, then there is up there. Alright, let's see how it's kind of closes, and let's wait for the next candle too. Yeah, I think this may be the black candle that could have been the entry for the long, but it was weird. So it was weird. Ye- Quite interesting what's happening on here. Price has been a little tricky to trade today. A little tricky. Obviously, as you can see, we wouldn't have gotten stopped out on that move to the upside if we're still on our short, but it would have been like no one would have complained if we got stopped out. That's what it was. So I don't know why that happened. Is it 12 o'clock? Is that why that happened? Or it's just 9:42? Interesting. Quite interesting. Yeah, well, we'll wait for something more obvious. We'll wait for something more obvious. That's good volume on that blue candle. Very, very good volume. So now let's get some pullback. Now you can even use this low and the candle before that low is down here. So we can even use just here. So ideally, let's get a pullback. And maybe a pullback and a half. Like maybe something that comes in and rejects something. I don't know. But I think we're going to the highs, man. I think we're going. I think price is prepping to go to the highs, man. So give me a black candle. Come on, buddy. You got this. Give me a black candle. Give me a black candle or two. I don't mind two. Give me a black candle or two. And we'll be fine. All right. Well, let's see how this closes, I guess. Interesting. Ooh, he's about to break the low of the volume candle. Oh, interesting. Is he going to reject? Is he going to reject? Huh? Huh, 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 huh. What is it going to do? It's kind of annoying. This is very annoying. I'm not gonna lie. Like, if I get in right now, the spread will put me in here. Bro, come on, man. That's just not right. Like, these people have no conscience. They have no conscience. Oh no. Well, that's not a bad entry right there, that black candle, though. Spread, man. I need to get over that. They hide behind, oh, you don't pay commissions for the um you don't pay commissions for the US 500 for the SPY, and then they just give ridiculous spread. Ridiculous. 1.2 pips right now spread. Might as well ask me not to trade. It's so annoying, especially because it's visual. I can see what it looks like. It's very limited. Oh my god. Anyways, I need to find a way to get over this mentally. You know, this after going through all the mental trading, we have to now also go through the psychological. What's it called? Hindrance from our brokers themselves. That black candle was such a nice entry. But if I literally pressed buy on that black candle, it will fill me up here. Like, the moment it closed, it will fill me up here. Like, does that even make any sense to you guys? Because it doesn't to me. Whatever. Maybe after I make some money, I'll go and start trading just the SPY. If I trade in trade with a stockbroker, I may have better spread. And with 100 grand, I can trade this SPY. I fuck. Or maybe if I trade futures, it would be better spread there. Either futures or the SPY. Uh, So I hit the visual. So now I'll just get mad after I'm in the position. Like, what the fuck is this? Why would they film me here? That's before I could see it. Now I can't see it before I enter. So now it's like a trick in my mind. So I'll be able to enter my trades and then get pissed after I enter because the spread is annoying. Like, what? That's not where I wanted it. The spread is nasty, bro. What the hell is this shit? That's how it's gonna be. It's annoying, man. It's actually annoying. There's nothing I can do about it. So the trade looks something like this now. So entry is about here. Same stop loss stuff, but it's about there. Maybe it's 11:10. Whatever, it's 11:10. TPs obviously. It is what it is. There's nothing I can do. Nothing I can do. That's for sure. I'm just a leaf in the water. Not even a fish. A fish is a little too big. A leaf in this water. A leaf. That's how insignificant I am in this market. But that's just for now, because I'm still broke. It's fine. When I'm playing with billions, they'll tell me I'm insignificant. Dead bastards. Just imagine if I was in where I wanted to be. Fuck this. No, fuck. I am good, Jeff. A little pissed. I'm pissed that I have to go through this. This spread. What is spread? I hate it. It's annoying. So, yeah, that's how I'm doing. So right now, I'm literally looking into futures trading, bro. I just spend my time looking into futures trading. I've been looking into futures trading right now. As a matter of fact, I'm not just looking into it. I'm literally I've signed up for one. if there is no if there is not that, because I know in stock market there's not that much spread, and if I can trade my same strategy that I'm trading here on futures, well, I will go there. Because this place is annoying. I hate spread. How are you doing, though? How's everything, bro? Top Step Trader. You're in. Oh, you trade futures? Oh, nice. I'm with Top Step Trader. I just signed up for. Okay, so since you trade futures, yo, can I hedge? I don't know if you know my strategy, but like, can I be in a long and short at the same time? Would they let me? Yeah, trade over it. Trade over it. Yeah, yeah. But can I hedge? That's what I want to know. So right now I'm in a demo account, but I'm thinking of after if I'm able to trade my strategy in the futures the same way I trade in forex, then I'll pay for the monthly subscription for a live account. Oh, if I can hedge, how is the spread? How is the spread? I know in stock market there was still spread, but it wasn't as bad as this one though. Oh, so I can't hedge in. I can't hedge. I can't buy one ES sell and one ES buy. I can't do that. I have to go to the MES. I mean, it's not like it. I'm just asking. It's not like it's do or die. But is that the case? Mm, I mean, it's hedging. It's not flattened position. It's hedging. But sure, I don't mind. Getting in. So, but on trade of it with the top step trader thing. One ES big mama. Yeah, I get, I get. Also, I have a position size calculator on forex. Do you think there's one on for the futures? Because obviously depending on your stop loss, your size is different. So do I have to? Oh, nice, no spread. Do I have to? Do I have to calculate my size every time? No spread near zero. What am I doing in the freaking? What am I doing here in forex? The spread is too much. Yo, look at my trade right now. Look at my trade right now. I'm supposed to be in freaking. I'm supposed to be like in right here. I'm supposed to be in right here. This was where I wanted. No, right here. This black candle here. It filled me. Okay, I ended up getting in on this one, but it filled me. I'm in like somewhere over here. It's crazy. If I try to get in here, it'll fill me up here. It's so annoying. It's very annoying. It's very annoying. Very annoying. Extremely annoying. Like so annoying. I don't think it really I can really put in words how annoying that shit is. It's so for the forex it's a minimum of 1 point spread. One point spread. 1 pip. Minimum. It could go higher. 1 pip minimum spread. It's so annoying, bro. It's so annoying. So annoying. Like that thing really gets me. It's not supposed to get me that much, but it gets me. I didn't enter the trade. I entered the trade later. Like imagine if I was in here, right? Because this was I still had to reach the same stop loss, right? So imagine if I was in down here. Look at this. Look at that. Versus being in up here. Versus being in up here. It's completely different thing. It's crazy. Yeah, 1 point equals $50. Yes, sir. Yeah, so about the calculator thing, is there a way to figure out is there a way to have a calculator that calculates your position size by dragging your stop loss or basically by dragging your stop loss, what I'm thinking. Basically, yeah. Like it's true. I am down 50 depending on how much my capital is. I'm immediately down $50 at entry. It's crazy. It depends on the lot. Because with futures it's one contract, 1 point is $50, right? With forex, with the US 500, it's going to be like one contract, 1 pip is $10. Yeah, that's basically one contract, 1 pip. It's not $10. I guess it's $10 for the Euro, USD, and the rest. So yeah, let's just say it's $10, around $10, really. Yeah, commission. I don't mind paying commissions. I prefer a good slippage. I don't mind paying commissions. Also,
Order filled. Order filled. R.
You got in 4,000, now it's 416. That is $800 for one contract, right? So I guess there's no calculator that will immediately calculate my stop loss. I guess I have to. So with one contract, so 1 point, let's say 1 point, so 4,000. Let's say I'm getting at 4,000, risking how many points? This would be 45 points. I guess it's no, it's not. It's 4.5 points. Yeah. 11 points. I guess this is 11 points, right? So from here to here, I think it's 11 points on the futures. Is that correct? 4.5 points.
R.
Oh. Okay. So it's 4.5 points. Okay.
R.
Wait, okay, so it's 11 points. Okay, 11 points. From here to here is 11 points. Okay, 11.25 points. So I just have to know that if I'm going to buy one contract, at that point, then 11 points is going to be risking $50 per contract per point. Woo! Yeah, so 11.25 times 50. I'm risking $562 on that trade. What?
R. R.
It's actually not that hard to calculate the thing, eh? And then if I'm going to go to the MES, it's just times 10. Or divided by 10 rather. So if I go to the MES, it's just divided by 10.
R.
I'm just thinking.
R.
So let's say I buy I'm using Top Trader. Are you using the Top Trader too? I'm gonna get the account. Let's say I buy their funnel account for the 150K, right? Let's say I buy their funnel account for the 150K. That's about my daily my daily loss limit is $3,000. No way. Okay, so I'd assume the maximum I can lose on that 150K is 4,500, right? So 4,500. So if I'm risking per trade, because I only trade once or twice or 3 times in a day. So if I'm risking 500 per trade, that's not bad. If I risk 500 on this trade and I make 1,000, it's not bad at all. Not bad at all. And then if I have to hedge, then I'll go to the MES and hedge, right? Go to the MES and buy 10 times. But now they say, okay, let me share my screen real quick. I don't know if you. All right. So here you can see it says, so this is the challenge, right? For the Top Step Trader. So starting K. See, average true range of ES daily is about 10 to 12 pips. No, 10 to 12 points. No, I don't think so. I don't think so. Are you talking about average true range daily or average true range of per candle on the 5 minutes? 7 to 10 points. I think it's way more than that, bro. I can add the average true range indicator right here. ATR. Oh, 5 minutes. Oh yeah. Yeah, that's fair. I was about to say, like, hello, what do you mean, sir? What do you mean? Not what I've been trading. Are we trading the same ES? All right, let's go back to this thing. I want to show something here. So, so monthly price for this account is $375 USD. Woo! That's a heavy one, bro. It's a heavy one. I wonder what happened. Oh, I guess I can only. I can play with this. Maybe 50K. Maybe I can play with the 50K a little bit. You know, I can play with the 50K a little bit, right? And then when I make enough money, I can transfer it to this one, and then transfer it to this one. I wonder if they increase. I mean, they don't need to increase your balance. I don't know. I wonder if they increase your balance as you go. But that aside, so I'll start with this. What did you say there? Profit target is 6%. Cannot lose 4%. Yeah. So cannot draw down. So I wonder if you draw down 4% on your account, do you have to repay? I guess if you draw down 4%, you just gotta repay another monthly from the day you draw down. Like your month has ended basically. Basically your month has ended if you draw down and then you have to restart the month. I think that's what it's going to be. I think that's what it's going to be. Yeah, I think that's what's going to be. And then you have to probably, because for every time you start, you have to do like a trial period. And so during the trial period, you have to where is it? See how it works, right? How it works. So you have to step one of it is not live, but I guess you have to get to the profit target with step one first. Yeah, I'd have to talk to these people and really ask them. $30, God forbid. Nope, I'm not looking for 30 days, bro. Nah. I think I just need to know really what. Let me look at my trade first. It's looking not too bad. Still looking good. It's looking like I should hedge here though. But I think price is gonna break up. It's not really giving. There was the entry to hedge on this candle, and there's been no reason to get out of the trade yet. So interesting. I got in. short on one ES. Like, this is a practice account. I got short one ES at 4015.75, 4015.75, and I'm in profit by 1250 right now. And I got in long the same time. I got in long the same time at 4016.00, and I'm down. It's like the difference between both accounts. The difference between it's $25, even though it's 1 and 10. It's interesting. I don't think that's much, but it's interesting. Negative 800 is more than 1.6% of 50K. Yeah, if I'm doing 50K accounts, I'd likely not be risking 500 per trade, right? I'll be risking probably 250 per trade. No, if I'm risking 500 here, then a third of that, I guess. So I'm risking 100 and maybe 150 per trade on the 50K. Yeah, so that's what I was thinking about. So if I'm going to be risking 150 per trade and one point is equal to $50 on the ES, I would have to only trade the MES because I'm never gonna risk less than 5 points. I always risk at least 5 points on my trades. So I'll have to be trading the MES the whole time. So, but then that's the thing now, because I'm only trading the MES, I can't hedge. You see what I'm saying? Because I'm only trading the MES, I can't hedge. If I'm only trading the MES, I can't hedge. That's a problem now, isn't it? And even if I was here and I'm risking 500, then the maximum amount of points I can risk is 10 points. I gotta think about this one a little bit more. There are definitely limitations to whatever you want to do. There's always limitations, but it's interesting. Yeah, but I can't hedge. You said I can't hedge I can't buy long. I can't flat on any of the whether it's MES or ES, right? Like if I go long, I can't go short on ES. If I go long on the ES, I have to go short on the MES. So that I'm assuming if I go long on the MES, I have to go short on the ES. I can't go long and short on the MES. So if I can only trade the MES, then I can't hedge by that logic, right? Yeah. So therefore, my trading style is limited in this thing. It's limited. Because sometimes I'm risking 15 points, 20 points. And another thing too is you have to buy minimum one ES contract. That's another thing too. Exactly.
uh, uh,
Yup, 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 yup. It's annoying. Nothing is perfect. Nothing is perfect. Like if they would just let me hedge on the MES, I'm good. Like that would answer all questions. But I can't hedge on the MES. I have to. Fuck, man. I'm still thinking. I'm supposed to be in a hedge right now on my trade right now, but I'm just chilling.
uh,
Ah, look at you, Jeff, with the loopholes. Okay, okay. Ah, there you go. I think that right there is the answer to the world's problem. You just solved world hunger, bro. You just solved world. So instead of even because the MES is just absolute garbage, instead of even trading any of it, just trade the MNQ. Is the MNQ also 1 point equals $5? Or because the MNQ is the NQ is completely like it's like times 10 of the MES of the ES. I mean the NQ is not times 10 but like times 3. So how is the points measured? I know for the ES it's
uh,
50 and 5. So what is it for the EQ? NQ. Give me a second.
uh,
Oh shit! It's smaller. Because 1 point is $2 on the MNQ. For the MES, 1 point is $5, right? So MNQ is smarter. Are you it kind of contradicts your prior statement. MNQ is the bigger mama, so so you're trying to say.
uh,
So let's say I was trading this here right now, right? I have the NQ here. Now I gotta buy the NQ because the NQ is delayed for me, right? Oh, it's not. Oh, I have the whole features. Perfect. So let's say I have the NQ here, right? Let's remove the spice garbage. Let's say I have the NQ here. Yeah, because it moves more points. Makes sense. Makes sense. So if I had the NQ here, and I wanted to now at the ES, this is a point to hedge, right? So let's say I wanted to hedge. So I just in the NQ, I just need to get in short because this is the same candle here. So getting short here, but now I just reached this high. So with the ES, I'll be risking how many points? Because the points. So let's say with ES, if I was going to hedge there, which was this one here, this one right here, right? I had to be risking 7.5 points, so about 8 points, let's say, right? On the ES with that hedge. It actually is about 9 points, let's say, on the ES with that hedge. And it's risking just above there. On the NQ, it's technically whoa, yesterday. Is this no, this is not the NQ. I'm like, whoa, what? Whoa, 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 shit. Just forget about that. That was my back testing. I just completely messed it up. I have to go back all the way. And moving on. On the NQ, is this same thing I want to risk? And this one is about how many points? Holy shit! I cannot. Wait, you said 9 points equals $450? That doesn't make sense. 9 points equals 4 on the ES? Maybe on the ES. So On the ES, yes, but on the so for the NQ is $2 and $50. For the ES, it's $2 and $20. For the ES, is $5 and $50. Oh, okay. So yeah, so I did even 41 points on this one. Hallelujah. Well, it's 41 times 2, right? So 41 times one MES contract equals 2, so times 2. And then if we buy one contract, it's just 82, right? So 41 times 2. And since we're only risking, let's say we're risking 500 per trade, that will be times, or let's say it's 150 per trade. So we can only buy 2 contracts then, right? So we just buy 2 contracts and risk that. So at this point we'll have to hedge with 2 contracts because, yeah. But in this case, I'd have been in down here. Mm. In this place, this is already 16 contracts. Damn. For the ES, this is the same thing that I got in here, risking about 7.5. It's 16 on the MNQ or the NQ. Yo, I'd have to really study it. Hey. Well, I should find a way for it to work. I should find a way for it to work. Because technically, a lot of the times, move on, man. Let me just do this first. Don't want to do that.
Ah.
7 times 50 is 350. 16 times 20 is what? 320. Yeah, not bad. Yeah. So this is what the NQ look like today. Interesting. When I got in short here, I actually reached this candle here, so I'm still fine. Like the idea is I'm going to use candle. Like I was trying to use the candle, like the candles to. So I reached here for the short, so I was still fine. And then, I got in short. Wait, I got in short here. I just here. Hey, one, 2, 3 candles after that. So 1, 2. By the third candle, we already broke. Oh, interesting. You would have blown your account. Come on, Jeff. I'm not stupid, bro. What are you talking about? Then you would have blown your account. That depends. If I took just one ES contract, right? One NQ contract, I'm only risking 45. 45 times 2 is 90. One MES, sorry, not ES, well, not NQ. One MNQ contract. 45 times 2 is 90, right? So it's not bad. Man said you would have blown your account. Bruh. That's crazy, bro. That's rude, Jeff. That's fucking rude, bro. That's like 60. Yeah, it's 45 points. And MNQ, I'll be trading. See, we're not trading the NQ, we're not trading the ES, we're only trading the MES and the MNQ. That's all we're trading, bro. Forever. Up until we have our own funds. And even then, it's still, you can't just jump into trading the NQ or the ES like that. It's crazy. Maybe when we have $1 million in our account and we're trading freaking 1%, and we can actually take the, yeah, we're not going to trade the NQ or ES. It's just the MNQ and the MES. That's all we're trading. You don't need to say that twice, bro. Got you. Yup. I'm just thinking though, cause let's put this thing side by side real quick. Okay? Put this thing side by side real quick. Here we have the US 5 and nope, we want the ES. Oh, yeah. Alright, so this is the ES, right? So if we put this in side by side, this is the NQ, this is the ES. Let me put the ES here. And put the NQ here. Right? So we put this in side by side, right? We'll see that when we got here and took this trade at this particular candle, the NQ broke this point here. The NQ broke that point. That may have been a deterrent to not take a trade, eh? That's what I'm getting at. It may have been, NQ broke this point. Maybe we shouldn't take the trade yet. But I think I've done a back test, a good amount of back test, trying to relate these two commodities, given that they are very similar. And even when you think, oh, because the NQ didn't do this, the ES shouldn't do something, the ES does it anyways. So now in this case here, you're like, oh, we've got into this high. We finally got to this high. How does price react here? It reacts negatively. But at this same candle, they have divergence, eh? Yeah, but it's not all the time they have divergence, right? They're mostly very correlative. They mostly go in the same direction. So, but at this particular candle where I would think to, okay, let me hedge, that was this candle here, and we had not even reached this high. So right now we'll be saying, let's wait to get to this high here on the NQ. Or one move faster. Yeah, the NQ moves faster in its direction, yeah. But the reason why a lot of people say they trade the NQ because it moves faster, I guess for people that scalp, that's fair. But the reason why I did not care regardless, because I trade specific, I want to make 2R. So even if I want to make 2R and I trade it on the ES versus the NQ, it doesn't matter to me. I'm still making only 2R. Yeah. So now I guess we can wait till price gets here on the NQ and then see how price reacts on the NQ. Let's go back to yesterday. Let's see how yesterday traded on the NQ. So on the NQ yesterday, oh shit, that's a lot of charts for you, bro. Let me go to this window. Okay. So on the NQ yesterday, it was around here. This was all black candles, and then we had this candle, which was the same on both. But we had a clearer base on the ES than we had on the NQ. So it would have been easier to trade on the ES. But again, it wasn't the clearest, but after our back testing yesterday, we would say, okay, that's a clear base now. And then the next point was this move here. Not much what's it called? Not much volume to the upside. And on the NQ, there wasn't much of a base as there wasn't much of a base on the ES. So maybe we could have got it's looking like a short on the NQ versus looking like a long on the ES. So literally on the same day, the first trade here is clearer on the ES to go short. This second trade here is clearer on the NQ to go short. The candles are clearer on the NQ to go short. Probably you want to risk, so given that it came to retest here, you want to risk maybe up here for the NQ. So on the on the NQ, you'll be risking how many points? That's about 33 points. So one MNQ would be $66. So 33 times 66. 33 times 2 times 2 contracts. So if you're looking for 150, you just get that 33. That's on the NQ. We're trading MNQ. Why? that's what's it called. If you trade only 2 MNQ contracts, that's negative $132. Right? So, but positive times 2 of that will be 33 times 2 is 66, right? So you take a profit here. Yeah. They take a profit here. Let's see one more day. Friday. We traded Friday. It wasn't bad trading Friday. We came after this. We got in short here. So in this case, if you got in short on the NQ, interesting. Price did not even break the high on that day on the NQ. It was actually easier to have taken the short on the NQ, but it was clearer on the ES. It's just where you should risk was a little hard to find. Oh no, I trade minimum 2 to 1 at the very minimum is what I like to trade 2 to 1. But now that we know, we just check. Oh, we can go 20, so risk at least 10. But it's easy now to know where we're gonna risk. So might as well risk up there. So we would have taken trade on the ES still, and then got our profit. I think on that day, because here we also had made sense to take this long versus this one. We really broke the low. And there was also there was a line here on that day. There was also a red line here, so it was easier to take it on the ES versus taking it on the MES, on the MNQ, or on the NQ. But this trade though, this one we broke even on that day. This one we took the short. It was easier to take it. See this particular candle. Look at how far it is down here compared to the high. So it was easier to take this on the ES than on the NQ. And then when price formed this and pulled back, it was easier to take this long, which would have been the hedge. So if I would have been on our short ES and then would have taken the long hedge here, and our risk for the long, for that one we're risking below this low, a little lower, right? Yeah, there was no other low we could use. So below that low, a little lower, about 4. So in this case, we have taken below this low, about maybe 10 points lower, so 30. We would have taken 30, and would have taken about 2 or 3 contracts on the MNQ. Looking for 60. We get 60 at this candle before even. Oh, we get 60. We get 60 at this candle before we even would have broken even on this. It's interesting. It's very interesting. Very, very interesting. I'm still gonna do all my analysis on ES because I believe the ES, obviously the NQ is a derivative of the ES. You could look at it that way, I guess, because the NQ is also just, yeah, I'll call the NQ a derivative of the ES. So I'm still gonna do my analysis on the ES, and if I need to hedge, or if the NQ just looks like a better trade at that moment, I may take the NQ. Alright, let's go back to the current day before we forget. So I do think price is coming to break these highs here. So at the very least, I think we may be getting to move up there. Yeah, so 180. Looking to make 360, right? Yeah, exactly. But look at the entry here. If I was in here, bro, if I was in here where I wanted to get in, my TP is just down here. Where's the risk reward ratio? My TP is down here. Bro, I'm already out. If I was in where I wanted to be, risking exactly where I wanted to risk, I'm basically already out. Do you see why I was so pissed when I saw the spread? Forget the commission. The commission is nada. Who cares? Who cares about the commission when you're making moolah? Who cares about the commission when you're making money? Nobody cares. Piss me off, man. Look, I'm supposed to be taking profit right now. I'm supposed to be taking profit. I'm supposed to be like, oh, stop me out. Look, but look at where I'm. Look at. I'm dead. That's annoying, man. That is hell of annoying. Look at where I'm taking profit now. Oh, I guess not too fast. Wait. So I'm actually supposed to be taking profit soon? No! I risked 160 on this trade, so I'm looking for 300 and something, 320. So, I don't know, what is this? This is it, right? I know it was risking 110 or something like that. Let me also put myself as break even before I forget. Anyways, but we're risking 110, so 110. Interesting. I was also, yeah, it's the spread. So the spread, oh yeah, so we're in here. 110, right? So about here. Yep. I forgot. So the risk is up there. So the profit is up here. Anyhow, we're break even now. I'm just gonna put it as break even just to be safe, because it hurt me today, man. It really hurt me. I felt very betrayed. I felt very betrayed. It hurt me, man. It hurt me. Trade 90 MNQ. $90. This man was like, we making it today or no day. Today, we making it today. We don't want to hear nada. We're making it today. Don't talk to me, bro. We're making it today. Do or die today. Ape in your freaking future today. We're making it today. That's what man said. Like, we're making it today. If it's not today, I don't want to make it ever again. That's what he said. Making it today or no day. We're done today. You can see that 5 minutes. Wait, are you talking about? Wait. Did this recently happen? The 7K you lost, was that recent? Like, it's not today though, right? You're talking about like when you were still beginning trading, right? Today? Wait. When did this happen? Today? Oh, I was like, whoo, no way it's today, bro. Like, no way. Wait, but 2 months ago, bro, you said you've been training for 2 years. That was a rookie mistake, sir. But then again, it's also the future is also a little annoying to calculate. But I've learned about it a little bit before, so I kind of already know the basics of calculating your risk. But damn, so you lost? Did he come back? Did you have to stop out at 7 grand loss? Are you okay? Is everything okay there?
Oh,
5 minutes, even one MNQ is $90. Yeah. I just have to. I'm already. I have the exact number I want to risk, right? So I'm just gonna be like, if I'm gonna risk 20 points, then I need. If I'm gonna risk 20 points and I'm risking $100, then I can only buy 5 MNQ contracts, right? With 20 points. So no, 2.5, two MNQ contracts. Because 2 points is, yeah. So five MNQ contract. Yeah, rookie in futures, eh? Damn, 4 grand. That must have. I mean, that's it happens. It wasn't a strategy mistake. It wasn't a strategy mistake. It was more like a risk mistake per se. It's not even a risk mistake. You probably knew what you wanted to risk. You just didn't know what it was with futures. So, quote unquote, yes, it is a rookie mistake, but at the very least, your strategy is still fine, or what. However, your trade, all your other things, your strategy is fine. It's just system mistake, I guess. You call that a system mistake. 8 NQ. I mean, they got Mula, you know. They got money. They got money. Yeah, it's I don't know. Teaching, they don't need to teach the system or the risk calculation per se. I'm not gonna hold any prop firm like you guys should have been teaching people what the risk was. Like if you're gonna go and if you're gonna learn trading and your first step is going to a funded account and you're going to a live funded account, then at the very least you should understand what your risk management is, because funded accounts, like I've said before, are when you already have a strategy and you obviously understand how to manage risk. They literally call them funded accounts, like you're managing an account. So if you're gonna go and start managing an account, you should understand what the risk is. They don't need to teach you that. They're not educational systems. They're risk managers. Yeah, people. So that's exactly. Some people want, some people want to pass the challenge in one trade. Some people want to make millions in one day. So yeah, so it is what it is, man. It is what it is. I think I'm going to buy the monthly thing today. Watch FOMC. What's FOMC? Let me see. I think there's news today, right? And that's called the FOMC. Oh, it's at 2 p.m. Eastern time. So that's at 12 our time. There's going to be a lot of resets. A lot of people. What do you mean? They're going to reset their account, bro. That's unfortunate, bro. That's unfortunate, bro. Well, I hope they reset their account in my direction. Me, I'm already break even, so I can't lose this trade anymore. Well, I hope they give me the money wherever they're throwing it to. Let them send it to me. Send it to me. Oh shit! But yo, coming into here, this was a massive drop. Same way this was a massive drop. We already passed this, so let's see how price definitely trades at this NQ because this could be a short. To be honest, could be a short coming in. But it's formed this base. It's formed structure approaching, so it's going to be harder to just drop. But there was a massive drop here. It may have to respect it. Depending on how it trades, if it just runs through, we're good. We're good. Look, there was even a base here. There was a base here that we could have added. So like, let's say, look at the difference now. Okay, give me a second. I'm gonna show you something here real quick. Let me delete this. Okay, I'll leave that one since we're in a trade for that one. I'll delete these ones though, bro. I'll delete these ones, right? Look at this. Look at this. Let me remove this from here. Look at this. Look at this base here that formed. Right, the same exact base is cleaner on the NQ. You see how it's cleaner on the NQ? We got a clean break. The ES was a little. It's the same base, but it's just cleaner on the NQ. I would much rather take it on this NQ, and my risk would have been at this black candle, this third black candle here. So we'll be risking there. You see how at this black candle on the ES we're already inside the box, but on the NQ we're still outside. So I'll take it there. My risk will be down here. So 39 points is what my risk will be. I have to reach the candle before the base, and the base is this candle, so the prior candle will be this one. So 39 points, and I'll be getting in with. So I'm risking 39 points. So I'm risking $100 or $150. So 39 points times 2. So I'll probably be getting 2 contracts, right? I'm only risking $256. So I'm looking for 39 points, looking for 79 or 78 points, right? So looking for price to go well above this high. So about here, which is not bad at all. It's not bad at all. I think price can definitely get there. So yeah, so that would have actually been a good ad right there. But yeah, I think I'm going to let me do this as well. I think I'm going to buy the account today or tomorrow.
Order filled.
But before I do that, I'm trying to call them. I want to talk to them. I want to get a couple of things straight, I guess I can't call them. I'll chat to them, get a couple of things straight.
Ah.
Oh shit, you can't even chat with live agent. That's just unfortunate. Oh yeah, that's just it. This man's like I heard that other thing. Hey, yo, what you doing there, buddy? I heard that other place. What you doing there? That's how you sound, bro. You remember I entered an ES. It's a demo account, right? So I was checking out the hedge, but I don't think it even mattered. But I entered an ES long, ES short, and MS long, 1 and 10. So I just closed the ES short because I think price is gonna keep going up. So that's why I closed it. So here we have the rejection. Let me go and short right now. Let me go and short the MNQ real quick. Short. We're going short. So technically we should be risking, or the MNQ itself, we'll be risking we're using this high, so a couple of points above the high, or the prior candle above the high. So right there, so about 15 points. So technically we should need about 15 times 2 times, what's it called? Well, 15 times 2 is what? 30. So we need 5 contracts on the. If we're risking 150, we need 5 contracts. 500 divided by 30. 16 points. So 17 contracts. So getting 17 contracts right here short. 17 contracts short. Sell by market. Oh shit, we're already far down. Damn, that's rude. Whatever. Sell by market.
Order rejected.
Why did you reject the order? I want. You see what? Why did they reject the order? Oh, I can't. It has to be in fives.
Order rejected.
Oh, nope. It doesn't have to be in fives. They rejected the order. Why? Your maximum position limit has been. Your maximum position limit has been. Please submit a risk change request. Interesting.
Ah.
Yeah, this is what I was expecting. You see, I'd have hedged on my MNQ right there. Once it got to that point, oh my god, I'm liking this. I'm liking this. I said I like it like that. Whoa, 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 whoa. Expected though. Very much expected.
Ah.
He said I think you blew up the demo. Nah, bro, I didn't blow up the demo, bro. I hedged. What are you talking about? I think you blew up the demo. I'm dead. Nah, I didn't blow the demo. I hedged. I don't think we go down though. I think we bounce. What I think. I can make sense. Got the amount of rejection here. It makes sense that we're dropping from here. But I don't think we go down. There's a base here. There's a whole box here. I think we bounce. So I think we bounce. No, but I didn't blow the demo, man. I didn't blow the demo because I had a hedge. So I'm still in the long. I didn't close it long yet though. But it's interesting. Interesting. I definitely need to learn a little bit more about all of these things. Like how many contracts really can I get in and stuff like that. Let me call them. I'm calling them right now. Give me a second. Yo, Jeff, man. Sorry, you say you okay, man? Yeah, I'm okay, bro. I was just on the call with the thing is, it's here. Ah! No one stop that! No, don't stop me out! Damn it! Fuck! Go away! It's because of this ES meaning. You got this NQ right now. It's because of this. This is why price is wicking down, right? Ah! I got stopped out. Fuck no!
Oh,
I got stopped out. Shit! Shit! I got stopped out. Damn it! Ah! Kind of happy though. I talked to them and all my questions were answered. Damn. I should have taken this live money I played with just now. I just played with live money just now like no man's business.
oh, oh.
No, I didn't put up. Oh yeah, so the reason why I wasn't able to enter the what's it called? The trade that I wanted to that hedge, it was because you have to only risk you have a maximum of 15 contracts. Whether it's 15 contracts, total maximum of 15 contracts. Whether you have 1 ES and 14 NQs, doesn't matter. Maximum 15 contracts. So I already had 10 MES. I could only have 5 NQs at that moment. But yeah, man, damn. I got stopped out, bro. You see something? If I was in here right now, I won't be stopped out. You see what I'm saying? If I was in here, I won't be stopped out. Fucking Forex and a stupid spread put me here. If I was in here, I'd have already taken profit. You know what? I'm pissed. I'm pissed. That's all I know. I'm pissed. Pissed. If I took this trade too, the trade I called, this one here, right there, short, risking that, I think it was 15 points, right? 15 points. Look, we don't get stopped out and we take profit, bro. I'm pissed. Could have even put in here 25. Tip. I'm pissed. I took a walk. All right. I'm back from my walk. It's all good. Everything's okay, Michael. Don't let this stupid trading stress you. Don't let it stress you, bro. You're too cool for that. It's fine. Bro, I should be taking profit like back to back right now. Like are you seeing my trading? Spotless. My trading is spotless. So let's say I was risking what? How many is this? This is 25. So with 25 and I'm risking $150. Let me do the number for this thing real quick. So with NQ, position size calculator.
Ah.
What do you say, Jeff? Uh, that's insane. Yeah, bro. It's all good, man. It's all good. I'm not gonna stress it. But yeah, if you have any questions, I got all the questions. I got all my answers from
Ah.
25 points times $2 times number of contracts, right? Man, she hurt me, bro. I'll be lying if I say I wasn't hurt. I should have made profit on this. That's one. Take my NQ short. That's two. Take my NQ. Like, yo, look. If I even got in this NQ here, look at this NQ. My stop loss is under this. That's why I put it right under there. We still didn't get stopped out, bro. We still didn't get stopped out. We're still waiting for profit. I think it's gonna go up. I think it's gonna go up because it's done structure to the upside. You can see it's not even closing inside this box. I think it's gonna go up. But if look the spread right now, if I was to get in on this ES, the spread will be here. The thing is here, spread is here. Like, are you dim? Are you? I'm gonna make an Excel sheet to Excel sheet. I was, but I'm just thinking. Does this calculate the contract size? Let's say 150K, right? And then risk is 3%. Entry price is already set. Ticks is already set. Is it 90? This is it. Stop loss is 45. But it's not 45, right? It says 45, but it's 11.5 points. What's the contract for this? Contract size. Quantity 8. But it says 45. Why is it using 45? I can't use this one.
Ah.
Oh. Okay. 1 point equals 4 ticks. Okay. Yeah. But like, what is the 40? Oh, so I guess it's 45 ticks in. Okay, like, because each tick is 25, 0.25 points, I guess, 0.25 points. Oh, okay. I can't use this.
Ah.
Yeah.
Ah.
Mm. 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 Makes sense. Look at this. I expected a drop will happen, but I don't think it's gonna break this base though.
Ah.
I don't think it's gonna break that base. Let's see how this candle closes. I may get back in long. Maybe. Yeah. Ah. Mm, just thinking. Tradovic should be here. Where's Tradovic? It's not here. It should be here. Tradovic. Oh, right here. Got in long. 5%. I think it's gonna go down a little bit, and then I'll probably get in long again. After this kind of closes. Maybe I need to create an Excel sheet for that.
Order filled.
Nice. Like, no spread! No fucking spread! Crazy. I entered my trade on the Just Forex account. I got filled. Look at where I got filled. I got filled up here. Basically where I was before. And I entered when the thing was down here. Crazy. 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 I think I should make an Excel sheet.
R,
What are you saying here? Broker spread versus CME future products, very different. Yeah, bro. I learned the hard way. I just lost some money because of that. I hate this. I hate this. I hate this. Man, fuck this guy, man. I've been swearing a lot today, man. They really pissed me off today. They really showed me their true colors. But it's fine. I learned a lot. I'm probably going to stop trading on this account. I'm not even kidding. This is probably gonna be the last day I trade on this account. And I'm going to start trading on my, so I'm going to have to
R,
yeah. Trade over it. I got in 5 MNQ. I'm up $500 right now. 450, 400, 500, between 400, 500. That's 5 MNQ, eh? 5 MNQ. For you to be 5 MNQ, one tick is $2, right? So 5 MNQ. Let me make my Excel sheet real quick. Let's make an Excel sheet real quick. Let's make an Excel sheet with we'll make an Excel sheet with changeable variables. So here we'll put MES. Here we'll put
R,
MNQ. Okay, that's one. What are the variables we want to change? We want to calculate position size, right? So the variables are changeable. Stop loss, right? There's stop loss. There is that's about it. Oh, so stop loss, and then the ones that don't. So stop loss. So the one. Let's put the ones that don't change first. Okay. The ones that don't change, we'll put it up here. So we'll put 50. For MES it's gonna be 5, and for MNQ is gonna be 2, right? Stop loss changes. Position size was calculated, right? Hope I'm doing this right. And then, because it's been a while since I did this. So, for stop loss, whatever value we enter there. Oh, so, for the position size, and then what other thing that changes our risk? Our risk is going to be, we're starting with 150 account, $450. So, that's about 0.3%, right? Stop loss. So, position size, we want to say equal to, position size equal to, so how do we calculate position size again? We go the stop loss times the 5 or 2, then times stop loss times 5 or 2. That will give, how do we calculate? So we have, let's say we're risking 11 points. 11 points times 5, 55 for the MES. And let's say we're risking 150. So it'll be 150 divided by 55. So for 11 points, we'll need 2 contracts or 3 contracts. Is that correct? So 11 points, we need 3 contracts. So with 3 contracts, 3 times 11 points times 5 per point, and that's, yeah, so that's correct. So basically the position size is equal to your stop, your 450, which would be this $H, I believe, $H divided by bracket stop loss amount. So we have to change our stop loss every time. Stop loss amount is H1. H1. Stop loss amount. So that's I4 times I1. That's what it would be. So let's say our stop loss is 11. Distance, what is, whatever. So just say H1. It doesn't change anyways. We don't need to. Oh, it's dollar. It's $I4, right? Is that correct? So H1, which is 450. So in this case, we're risking, so let's say it's 11, right? So it'll be 450 divided by 55. Yeah, 8. 8.1. Yep, we got it. Alright, so, and we need to put this also as dollar. So, because that way it doesn't change. Alright, so we need to, let's delete this row. Actually, I would just need to come here and change it whenever I want to change it. Just need to come here. And then we can drag, Ctrl Z. We can drag this. We can actually give it some space. Give it some space. And for this, so each of these things don't change, so that's it. So you will always, so for this one it's gonna be J. It's gonna be J. It's gonna be J. Yep. So let's say it's 11 still, the same thing. So whenever I just create my stop loss, I just come here and just quickly put my stop loss, and that will, every day I'm going to decide. So we're going to use set amount per trades, not percent wise anymore, to build this what's it called, to build this funded account. And so every day I'll come. So today we're risking 450, right? And then we just come, and then let's say we risk 500. I just need to change it at the beginning of the day. And whenever I have a trade, I always have my trade set before before it gets there. I always know what I want to trade, right? Oh shit, the price is coming against me. I think it's fine. Okay, so I always know what I want to trade before price gets there. So I'll this may be the candle that closes below this, eh? It's not very good. Okay, all good though, all good, it's fine. So I'll this never changes. This changes per day, and this changes per trade. That's all it is. And then this is our position size. How do you like my Excel sheet? It's nice, eh? Hey, Jeff, it's nice, ain't it? Quick. And I've made my position size calculator just like that. Done. Finito. Pretty cool, right? Alright, so I think I'm going to pay for that account today. Thank you, sir. It's cool, eh? You can copy if you want. I'm not gonna copyright it. I'm not gonna copyright it. Don't worry. I'm not. It's all good. I got you. Yeah, so we just have some variables that change. One changes per day, the other one changes per trade, and then position size calculator down below. That's it. And so that's our position size calculator done. Now we just need to. Oh, I need to now add a window. Let me see something first. Let me see what. Something that I just saw now. If I'm risking 450 bucks, let's say I'm risking 450 per trade, and I'm stop loss at 11 contracts, my total position size will be over. But given, let's say if you stop loss at 11, let's look at this here. If you stop loss at 11 for ES, let's say it's at 11 for ES. That same distance from here, right? That's from this candle here. Let's say from here. That same distance is going to be, that's point, let's just say 0.29% on the ES is what? 0.29% is 35 points. So 11 is about 35. So we'll assume, so this will be 35. ES 35. Stop loss 35. So total contrast about 15. So 9 and 6, which is 15. Yeah, so that's fine. Alright, so I'm about to pay for that. I'm about to pay for my trading combine. Let's see how that goes. $375. So what I'm gonna do, if that's the case, what I'm gonna do is I'm going to remove $600 from this stupid forex account here. I'm gonna remove $600, and I'm gonna assume that that's what I'm using for my trading combine. So let me just, you just watch the account balance. You'll see $600 disappear right now. See, I'm not stupid, eh? If I like to balance things, even though I'm aggressive with my trading and with my, I'm having fun to an extent, but even though I'm aggressive, I ain't stupid. Honestly, if you're gonna be a scalper, you should definitely do it on futures. Don't even try doing it on forex, but it's because the spread will destroy you. It will just ruin your whole thing. The spread is disgusting. Like, imagine a scalper there just now would have taken that. I was up like $600 at the peak, I think, or 700. Just risking 500. I was risking 5 contracts. 5 contracts could easily be down at 35 points, right? So let's say we're here. So we got in around here. We literally got in around here on the candle, around here, right? So 35 points would have been down here, which is like our risk normally is already here. Like, it shouldn't cross this point. So that's more than fair. So 35 points would have been risking $450. And we made about 60, almost 70 points, which is TP. Come on, baby. Scalpers will. I don't want to scalp in futures, really. A lot more people scalp in futures. I see it quite a bit. But that's cool. That's cool. He's all good. Alright, let's pay this shit and let's move on. Yeah, did you see the money disappear? Have I removed it yet? Yeah, I removed it. See? Balance changed. Huh? Let's wait for this count to close. That's another thing too. These guys charge per month, yo. They charge per month, bro. Hey, it's per month. That's another thing too. You gotta factor that in. It's not a one-time payment, Michael. It's per month, bro. Let me check my position size calculator for something real quick. Let's say I was risking out of the 50K. Out of the 50K. Give me a second. Is the stream down? The stream is down? Why is stream down? Let me check. Why would the stream be down? What? What did I do now? What did I do? It doesn't say it's down. You can't see the stream? Oh, the chat was not moving. Oh, probably because yeah, that was probably my fault. That was probs my fault. All right, so I was looking at so let's say it was 150. Mm. $400. I'm in Canada, so I have to pay $410. Probably even more with taxes. I'll do it. I'll do it. I'll do it. I did it. I pressed it. I pressed the damn thing. So from tomorrow, we start our funded accounts, my friends. I'm going to stop trading on this stupid thing here. Wait, Jeff, are you there? Is everything okay? Is the stream still down? I paid, yo! I paid! I need more money. I need to remove more money from this balance. I need to remove more money from this balance. You actually love, oh my god, the way Futures is bringing back the nostalgia from my stock trading days. Oh, it feels so good. It feels so good. Yeah, I'm so excited. I'm so excited. Damn it. Yeah, I'm done. I'm done trading this stupid account. Fuck this account. I'm done with this shit. Done with this shit. Done with it. But the thing is, I like to stream the trading view for you guys. Oh, Jeff is no longer here. Jeff left in these times of uncertainty. All right, let's see what we're reading here.
Order filled. Order filled. Order filled.
Hmm.
R.
What do you mean, oh boy? What do you mean by that, Jeff? What do you mean by that, Jeff? Do you have a problem?
Order filled.
Oh, okay. Oh, okay. I see.
Order filled.
Oh, average comes down.
Order rejected.
Ah, okay, that's cool. So I can sell parts, right?
Order filled.
I did, let's say, 2. Bye.
Order filled. Order filled. Order filled.
Interesting.
Order filled. Order filled.
Hmm.
Order filled. Order filled. Order filled.
Hmm. I'm gonna add something here. I'm gonna add.
R.
Okay, I see.
Order filled.
Oof.
Order filled.
Okay. Not the best trade. What trade? I'm not in any trades. I closed the trade because I said it was about to start turning around, so I just closed the trade. What trade are you talking about? Are you talking about when my account balance is at 900? You know I removed money from the account. That's why.
R.
Yeah, well done. Yes, sir. Call me the future. I'm just kidding. See, your price has now come to this point here. So it's gonna form because there was a bounce here. So price may reject this area. And if it doesn't reject this one, then to come down to NQ and reject it. But damn, what a call. Yo, I'm not minding I'm not minding this side by side thing we have going on here. I'm gonna go during the back test today. Oh shit, I gotta work out soon though. It's already 1 o'clock. During the back test today, I'm gonna go. So the back test. Well, shit, right? Well, shit. I can't even. It's the US 500 that has the most data for back test. Whatever. We'll just go. We'll just do it here. What? We'll just do it here. We'll do it here. We'll go and we'll go all the way to as far back as we can get to. On the 5 with the ES mini. It was December. We don't need the blue lines. We just want to check the correlation. We'll just be checking the correlation. Do that today. So all the way to November 22nd. So now we have price could definitely bounce here. Right. That's where price could bounce. Like I made molar on this day. I was trading it well. Just the spread killed me, man. The spread killed me. It made me less confident. It was just that spread killed me, man. So price broke this low. We don't like that. So wait for this low. Same way price didn't break this high. Price broke the high here. We didn't like it. But it didn't break it on this candle though. There was a base below, so we waited for it to. Then you got a pullback here. There's the risk. 39, looking for 50, looking for 78. Didn't quite get 78, but we got break even. That's fine. Because when price did this, break even here.
R.
Now we get 2RR or we don't want it. We don't want it. 2RR or we don't want it, baby. So the idea is, I'm not being stubborn about it, but there was a conviction, and the conviction is 2R. So you can break, because let's say you close at 1.5 RR, and then what if price goes all the way to 2R? Now you're like, well, I could have waited, right? So to avoid that, you just stick to one thing and just do that one thing. Because you keep changing midway, then you're like, oh, I could have done this, I could have done that. Could have waited, could have. Oh. You need to maximize your profits, right? That's the idea. Trade kind of got scattered today, but yeah, there was this one short. We felt it was going to break this one, so we didn't take it. We got all the way up here, which would have been profit on our trade. And we got a profit on our trade. And then
R.
yeah, 2RR in my back there state. Yeah, that's all I use. That's all I use. Like, look at this. If I got in where I wanted to get in, and I reached exactly where I was gonna reach, 2R, I got way more than 2R. Because 2R was just down here. And then for this one, I got it. Let's say I get in short here. Oh, yeah. Let's say I get in short there, right? I get in short on this blue candle. and then I risk. At that time it was 25, right? Yeah, we're risking 25, looking for 50. It's 2 hour down there. Like it's there. It's there. And for this, I'll be like, if I was gonna get in this, I know price will react here, so I'll be like, I expect price to come here, so that's 70. I may even reach 35.
Ah.
Right, that's the idea. Yes, sir. Yes, sir. It's just the spread that killed me today, man. It's the spread. But after this trade, after this particular trade, there was this trade before that, and then there was this short. After this short and this long and maybe this long here, there wasn't any other trade. This one I got in here at the MS, I saw it here. These are scalping type trades, and I don't scalp. But I think if I were to scalp, I think I'll be okay. But I'm not comfortable just taking profit. Just take it there, take it there. Like I'm not comfortable with that. But yeah, if I were to scalp, this would have been like this exact spot there was around where I got in, getting in there, and then risking literally because I knew that price had to bounce off of this base. It already did, and it had not reached here yet. So once it reached there and price was rejecting, getting there, you can even reach just under the base because price had. And if you reach under the base, you could see before it could break down there, before it could break down this point here, it still kept on bouncing. You would have had a lot of time to get out of a trade for break even or for a little bit of profit if you got in literally at this that doji base there. Literally that exact spot, that around there. You just get in there, boom. You literally get in there. What are you risking? You're getting in there. You're risking down here, which is 25 or 26, looking for 52. You get 52 before price starts to play around again. But that kind of thing, you would have to do it where there's little to no spread. That's the thing. Same thing here. If price gets here now, you can literally scalp this. You can scalp this. You can get in, depending on the candle, as the candle approaches, how is it behaving? You can get in there. That exact line. Probably risk maybe you know that. So right now, how's price trading? Price probably come back to this area because price is forming a base now. So if you're gonna get in here, you know that price probably come back to this area. So that's about 27 or 20, maybe 30. So you can minimum you can risk is 15. So you can risk 15, make 2 hour, or risk maybe more than 15 and hope to make 2 hour, or take your profit at less than 2 hour. Right? So that's how you scalp that. So 15, as price hits this line, how is it behaving at that line? Same way here, how is price behaving at this line? For this one, we knew that this was this candle. We knew that price could easily come back to this high. So we're looking for 65. So we could easily make back that 30 that we can reach. We can reach 30. I could easily make back 60, which we did. Right? So that's the idea. Path of least resistance. That's why yesterday we were waiting for price to get exactly here. I don't want to start using the freaking, what's it called? The level 2 depth of market. But you could always watch the depth of market at this specific point to be like, okay, how much buyers are in there? You may probably see a good amount of buyers there, or a good amount of sellers, or whatever it is. Interesting. Depth of market for scalping is definitely, I think, it's a plus for scalping though. But for my trading style, it's just, I don't really need it. Let me see it. The DO. Depth of market.
Order filled. Order filled. Order filled. Order filled.
Damn. Ugh. Hmm. Yeah, again.
Order filled.
Interesting.
Order filled. Order filled.
Doesn't matter.
Order filled. Order rejected. Order filled.
That's actually pretty nice.
Order filled.
Can I close it from here? Okay. Interesting. So if I mean 5 contracts and I'm risking $450, so max off, let's see. So I'm risking $100, right? And that's per point, so 100, that's 20 points. Do breakdown of GBP USD. Let us see. What is this? Oh, did I switch this way? That's crazy. We'll just do it here, I guess. Since I already have this to this date. GBP USD. I mean, today's breakdown. Today's breakdown. Oh, look at that. What is this? It's feeling this. All these currency pairs, man. Today starts from when? Does the daily start from? today's 23rd, right? So 23rd. No, today's 22nd. Starts from 1:30 p.m. EST. So that's 11 p.m. my time. 1:30 p.m. Oh, you sold at 1:30 p.m. EST. Oh, nice. You're still in, eh? Yeah, it looks like it's feeling this though. It's feeling this. It could bounce from any point in there, but given the fact that there's this here, right? So it could start bouncing from anywhere in here. Or if it doesn't bounce from there, then it will obviously go and feel this point. But so for like if I was, so you can see it's already bouncing from there. And if it breaks there, then to come and feel this point. But as for the day itself, it doesn't look like there's volume to the upside. On 15. Yeah, it doesn't look like there's volume to the upside. It still looks like it's rejecting. Yeah, so that is the same thing. So it's the same feel. It's still coming. It already started bouncing from here, so you can see it's already bouncing. But it doesn't look like it's really rejecting yet. It depends on you. I don't know where your TP is at. Yeah, you say you sold at 11:30 candle, right? So after it closed, I'm assuming. So maybe you sold here. What was your risk? Was it here? And you say you normally look for 3R, right? Where was your risk? Yeah, so you sold at the close. Where's your risk? Was it the high? Or was it this candle? Top of entry? Oh, damn. So right here? That's your risk? That's your risk? For 3. So you should already be out then. You're already out then, right? Are you out yet? Oh, okay. So if you're not out, that I've said just put your stop loss here. But you're already out, so I think it looks like it's gonna keep coming down. So you need to see how it reacts here, and if it reacts, you want to see if it has volume. So in here there was good volume, but there was no continuation to the volume, so it continued coming down. So it looks like it's gonna keep breaking down, but if there's volume, then it can turn around. But if I was gonna say where it would turn around from, it'd be either here or here. So that right there is the analysis, sir. But good trade, man. Good trade. Good trade. I like how you didn't even trade in US. You didn't even trade the ES or the NQ. But I saw flip of candle high. Fair enough. This was momentum to the downside. I mean, if you look at just the same time as what's it called from 7:30, let's say, base formed up here, it pulled back down. It came to retest the base on this candle, rejection, continued down. Then as it was coming down, it formed another base here, right? But this base is just an extension of this. So if I was going to trade off of this base, I would want price to retest this exact point here. Price did not retest it, right? So it didn't retest it. It came close on this candle, which I'd sometimes take this as okay, sure, fine. It came close on this candle. If I took this trade, then I'm in trade. If I didn't take this trade, then sure, I won't take the trade. I would wait. And so when price traded down, volume came in here, and then there was this rejection on the retest. I won't go in long yet. And then volume came in here again. So given that volume came in here again, on this pullback, I would go in long here. I'll go in long here because we had volume here and price didn't go far from it. It was showing volume and then it showed volume, heavy volume again. So on this pullback, I'll go in long here. My risk will be below this low. So technically, I'm using this low, so just a little bit below that low. So it'll be something like this risk in here. So maybe, I don't know the pips for it, so maybe 140. Looking for 280, but I also know that we need to see how price interacts here. So when price came in here, so now the line would have moved to this point here, right? So when price came in here, it looked bullish, but then this candle happened. When this candle happened, I would wait and see the next candle. Next candle was a little bit more bullish. I would wait. This candle is more bearish, and then this volume that came in at 12 came and retested that line and rejected hard. I'll switch from my long because I got in here. I'll switch from my long and go in short at that blue candle right there because the prior candle was also bearish. So I'll go in short right there, risking above these wicks. So technically, probably even risk up there. Ideally, risk up there, but I could just risk here. So about 180. Man said masterclass. That's crazy. Well, yeah, that's basically it. First of all, I wasn't trading GBP USD in live. One. Secondly, I did try to do it in live, but like I said, the spread. I called out my trade. I was saying that I want to get in here, but I don't want to get in because the spread will put me in here. I was gonna get in on this candle, and the risk was gonna be this. So I was supposed to take profit here. Right, so that's profit done, and I did it in front of you. I don't know whether you're listening, but I did call a short here on Nasdaq when I saw the Nasdaq candle. I did call a short here on the Nasdaq at this blue candle. I called a short, and the short obviously you're risking above this consolidation, so you get about 15. So first short was 15, and if you took that 15 short, you took profit at what's it called 30 before price came to stop you out. Took profit at 30 because this candle came down before going up. So all of these trades I'm calling. I just didn't take them on my freaking thing because what's it called of spread. It's all because of spread, man. But you'll see. You'll see. Buy the third trade. Oh, like that. This third trade that I took down here. Like that my third trade. You're talking about the trade I took down here. Yeah. That was a good trade though. Again, it's the spread, man. Like you see the way I don't like to take profit midway, and I also kind of don't like to stop loss midway. I like to just stop loss or break even or take profit. That's what I like to do. Doesn't mean it's the perfect way to trade. Doesn't mean it doesn't mean anything. Just what I like to do for now, at least. So when I got in, I was supposed to get filled around this area, which I called. No, it wasn't even on Nasdaq. It was here around this area. And if I got filled where I wanted, which is around here, my risk is just down. My risk for this one, for this Nasdaq, is down here at 10. 10, we got very close to 20. I wasn't paying attention to the trade because if I had seen that we got close to 20, I would have put it as break even. I wasn't paying I was doing so many things at that time. I wasn't paying attention to the trade. But not only did I not get in here, not only was I not also paying, because I got filled like freaking, was it here or something? like was like up here. So that increases my thing by like 14, and then now I'm looking for 28. It's crazy, man. It is crazy. Oh yeah, it was no, it was on this candle. I think I went in long. Was it? No, it was the first one was this one, this candle. Yeah, so I think it was this candle. I had this candle or this candle. I know I got in long twice. I think one was here, one was here, and one was I don't know, I don't know. I don't know. Let me check it. Actually. So I got stopped at break even on this candle, and then I re-entered on this candle. I guess it was already past that thing. I should have waited. I should have waited. If it was on the Nasdaq, if it was on this candle, it's still a good trade. Re-entering here, and the same risk is the same point. So re-entering here, risking down there. So 26, looking for 50s. You still get a profit. It was just executed on the MES. So for the MES, this first candle was a point to re-enter, risking down there, right? And then on the Nasdaq, because there are two different points, the Nasdaq it touched that point here, risking down there. But I got in on that candle on the MES, and then I got in again. I was supposed to get in here because we got close to the low. I was supposed to get in here. I got filled like up here. Crazy, man. Anyhow, those days are gone. Those days are gone. Interesting. Look how it looks on the MES and look how it looks on the Nasdaq. Scalping, eh? Scalping, eh? Scalping is fun, but I don't know how to trade. I really don't know how to scalp. Seems fun, but I don't think it's for me, man. Sorry, 150.
Order rejected.
How dare you reject my order? Oh, I'm in a trade. Oh, okay. Alright.
Order filled.
Scalping, man. It seems fun, but I don't know how to trade. I don't think I can be a scalper because I don't know where to get out. Like I know where to enter, but I don't know where to get out. So I don't think I can be a scalper. What did you say here? Your volume retest explanation is something else, mate. Damn. What volume retest explanation? What are you talking about? What is you talking about, sir? Oh, like on GBP? Maybe you're talking about GBP. What's happening? What? What are you talking about, sir? Why are you confusing me?
Ah.
On GBP. What did I say? I don't remember what I said. Okay, something. I know this is not good volume, right? So I said price could bounce off of this base here,
Ah.
right? You see, once I zone in on the chart, I'm in. But if I zone out, I'm out. Oh yeah, I think I said something about this base here. This weak volume. I don't like this volume. So you need to see strength. Obviously, there was good volume here, but there was no continuation on the volume. It broke the volume, and it broke it with volume. So this is weak. Price could easily continue, but also market is about to close, and I think that affects the anything that is paired with USD is affected by the
Ah.
market close. So you may have to wait till the Sydney for it to continue down. I think it's Sydney session next. I'm not sure. At 9 a.m. Oh yeah, this volume retests. So this volume occurs, and then it trades more. Some volume comes in, and then retests here, and then volume comes in again. So I'm not going to take the trade up until 10:30 here, long, and then when I take this trade long, I'm not going to leave the trade because I'll be looking for 2 hours. You see, this could have been a scalp for somebody. This could have been a very beautiful, whatever kind of, they would have just taken their profit maybe somewhere in here. Because some people will literally, I'm going to get in here and sell at this resistance, and they're out, right? I don't know how to do that, man. But anyhow, so I'll still be in this trade, and then this volume comes in, which makes sense off of this area, and then the next candle is not bearish, so I'm gonna hold my long. We don't even retest my long, and then this candle happens. This probably goes down before it comes up, so it goes down, and that's why I always risk a good space below the low I want to risk, right? So if I'm gonna risk here, I'll risk like a good space. So probably like I said, I think I said 140 at that time, right? So 140, and
Ah.
then this will be the rejection. That made you realize you're a scalper? Well, a scalper is not gonna be looking for 3 hours, bro. Like, first of all, a scalper too ain't gonna be there on the 15 minutes, bro. Scalpers are 5 and 1. But hey, you could be a new breed. A new breed, my good sir. A new breed. Because all through that time, there was a lot of trading. Like, you got in short around here, right? You got in short around here. Literally, this candle closed. This candle that I saw volume, and it made sense why there was volume. You got in short right at that candle. You risked the high of that candle. That's fine, right? But a scalper would have sold some in this area. This area where there's rejection. Even here, some people would just take that trade there, take out some here. For every freaking resistance area that may be a resistance, they are watching it closely and they are selling. So scalper would have sold some. They will not be in when it came back. Maybe a little bit and they will break even. And then maybe they re-enter short again. Maybe. But
Ah.
they will not wait for that 3 hour. Oh yeah? Oh yeah, that's crazy, man. That's crazy. I mean, I'm not against scalping though. I'm not against scalping. But I remember I told you to go to the 15 minutes specifically because you said you want to trade once a day. You said you want to, not once a day, you said you want to take that one trade and get that 3 hour and you're good. So that's why I'm like, go to the 15. Because if that's all you want, you'll get that one trade and it's easier to see things clearly on 15. So if that's still what you're looking for, then yes, 15 minutes is best. Is what I recommend. And even if 5 minutes, maybe 5 minutes, maybe. But if it's, because you need for one trade, right? So just 15 minutes is fine. You don't need to look for past 15. And then 5 minutes But 1 minute is a no. But if you're scalping, then 5 minutes is fine for scalping as much as 1 minute is fine for scalping. Maybe draw your zones on it. Maybe let's say you put, okay, I'm gonna, this is zone I wanna uh cover out, and this is zone I want to, when you come here, this is zone I want to watch for my short, and then you go to the 1 minute. Well, I would say I buy there 10:30 and stop loss at low support, then take profit at resistance on the left. So if I go back to the 5 minute, seeing a whole different way to swing. No. Oh yeah. So you normally buy what's it called? You normally buy at 10:30, which is around here. Oh, okay. You normally buy at 10:30, and then you stop loss at low support, yeah, and then take profit at resistance on the left. So 10:30 resistance on the left. For you, you expect price to break here, so resistance on the left. This would be your, okay. I see. Yeah, that's exactly what the scalping people would do. You learn that's counter trend. Yeah, it's reversal, right? Yeah, it's reversal. But for me, I just like to freaking. I don't know, man. Scalping it's fun. The thing is, it's fun. It's fun, It's fun. It's so much fun, but it's. I don't know. I can't. Let's go to the one. If we went to the 1 minute, we use our boxes, right? So this is 10:30. We got in long here. We got in long here, right? And then what is it? Hopping for reversal at support, then profit at resistance, looking left. Yeah. Exactly, yeah. So we got in long here, and then when price came to the resistance, there had some rejection, but there was a base that formed. And the 1 minute time frame is so much data, bro. It's exhausting. Woo! It's exhausting. It's absolutely exhausting. The 1 minute time frame is exhausting. I'm not gonna spend time there. I'm just gonna let it be. But yeah, man. Like I said, if I was gonna be in, it would be here long and then short at this blue candle, and I would write this down because now I expect price to break. I would wait for price to retest. So after I get in on this blue candle, I wait for price to retest this low. If price breaks the low like this, so this candle is a good retest. You could have hedged, but if you hedged on this candle here, then you would want to close your hedge at this particular, because you expect price to break this whole consolidation. So when price breaks this low and then you close your hedge here, you can even re-enter at this blue candle here even. And then get in by again at support, but this time reversal. I don't know, like you have all the scalping, right? I don't know, scalping, man. I don't know, it irks me, it sweets me, it pisses me off. I don't know, but I don't know, man. I'd much rather just trade. It's simple, you just watch price action, analyze the candlestick. And so on this day, let's say I came here on this day, my first trade would have been at 805 maybe, because of this consolidation that formed there. But the prior candle was bullish, so it could easily turn around. So I'd just forget about that. And then we wait your next trade. You're not going to take this either, because, and then your trade, this is a maybe, this is a better one. So with this one, you'd at least risk up there. So that'll be 216, looking for 420 and 32 or something like that. So you'll be selling around here if you took this one here. And then you wait. You're getting a hedge here. If you took a short here, then this would be a hedge. Your hedge risking lower than this. You get up there. Once this happens, right? Because at this point, because this was the first rundown to the second, you should have actually been break even on this trade. So once you take this hedge, you break even on your short. This goes up, and then this happens, and then you take another hedge here. When you take another hedge here, you break even again on this long, and then on this particular hedge here, you're risking something like this, or maybe even 180, looking for 360. and you make your final profit. But yeah, when you broke the low, right, you won't expect it to break. Yeah. Yeah, 1 minute is a lot. It's a lot of trading too, right? A lot of trading, a lot of data, a lot of trading. It's crazy. It's a lot of data, man. It's too much data for me. It's too much for somebody like me that likes to analyze each candlestick. It's like it's too much for me. It's too much. Oof.
Oh,
Yeah, buy support on the low retest. I mean, there's nothing wrong with buying. The thing though that people don't say is if you go to 5 minute, you need to know where you're buying, wherever you're gonna buy from with your lows. If let's say you come in on a day, we're gonna use the ES, right? We're gonna because we there's set days. You see this. Where did it bounce off of? Where did it didn't get there. It got close and then bounced. If you had, right here I guess it bounced
oh,
right here. This is it right here. Well, it didn't get there, but right there, close to that's where it bounced off of. When I was gonna say with the Nasdaq and the what's it called and the ES GBP with the Nasdaq and the ES, they have time volume basically. So well with the GBP USD and the rest is I don't know the times for it for sure. And it doesn't seem like it doesn't seem like there's times where there's all the volume in the world. It seems very spread out every day. But with the Nasdaq and ES between 9:30 Eastern and 4 p.m. volume, you know there's gonna be volume. 12 is here. Buy at the low, yeah. You know there's gonna be volume. So like I was gonna say, what's it called? So if you come on the day, literally, if you want to look at this trade, we came on the day. We didn't trade till about 7:55, and I didn't get in long, didn't do anything. If you're gonna buy off of a low, it needs to have volume, and you need to have retested that low. So if you're looking at the 5 minutes only, then this is where the low was. There was volume, good, but on the retest, there was no rejection on the close, and so it broke the low also. There was that. So then you have to be like, okay, what else happening here, and leave the trade. And that's basically what we did. When we found out it broke the low, we waited for the volume to come, and then on the retest, didn't get in because there was no entry. Same thing here. There was volume here. We waited for a retest. We didn't get a retest. We understood that we may not get a retest, and I said this. I said that we may not get a retest to the low side of this volume because there's a red line here and there's yesterday's low right here. So it makes sense that price will find support off of this red line and yesterday's low, right? It makes sense that price will find support off of that. So price did find support, and so we got out of our short. We got out of our short, and then we were supposed to get into a long. So we had a short here. We got into a short here. We got into a short here on this candle, risking up here. All of this happened. We thought, okay, if price is going to find support here, it will show, and it did show. If it was not going to find support here, it would have broken through and gone to rebound somewhere here, which would have gotten on our hedge long. But then this happens, we got out of our short around this candle, this black candle, right? So then this volume comes in. I'm like, okay, after this candle, actually it was on this candle. I said this candle will likely close blue, and then the next candle may pull back and continue going up. But the next candle went up and came back down. But even when it came back down, look at where it bounced off of. Yesterday's high, yesterday's low exactly, and it showed rejection. And then volume came. Once that volume came, I was like, perfect. Now we can get, if we get a pullback, I can get in long, and the risk is literally just below this candle. So the candle below that is this candle, right? So when this candle happened, I'm supposed to get in long here. Very, very simple calculated trade based off of volume and areas where price is likely to bounce off of. It's very simple. Like, it's not rocket science. And when I tried to get in, he wanted to film me here. I said, God forbid. No, not me. And so that's how we missed that trade. We ended up getting in eventually, but it was up here, unfortunately. I guess maybe I should have just taken profit when I got here. That's something I could have done. But anyway, and so that would have been this trade. And then when price got here, we're like, okay, let's see how price behaved at this line. It came, it rejected, but there was a base right below, and with this amount of base here, I didn't think price was gonna come down easily anymore. Plus, there was this blue line down here, so price came literally to the blue line, rejected, and I said on the NQ we could have got in on another long. If you look at the NQ during that time, during that exact time, the base that the NQ formed was actually nicer than the base that the ES formed, at least to me. So during that time when we got this rejection, or even this prior rejection, we could have got in on the NQ, risking the candle before the base, which would be down here, right? But anyway, forgetting the NQ, so we end up breaking the ES high. And once we broke the ES high, look at the NQ and what happened when price got here. Volume rejection all the way down. The thing is, it's not always going to happen that when price gets back to this point, there is bound to be some kind of rejection. Funny enough, there's bound to be some kind of rejection, but it may not be as much as this that happened today. But there will be something. It could have literally just been this one, and that was it. But there will be something. There will be a reaction because there's a lot of sellers here, is what that means. There's a lot of sellers here. So what did I say when price came here? At this exact candle, get short. It's that simple, man. If you trade with price action and volume, you'll be fine. And you don't need with the scalping. You're getting in here. I actually did a bunch of scalping on this demo account, but I put my order here. You're getting in here, getting out, getting in here. Like you can enjoy the scalping a little bit, but if you really want to enjoy the trade and just watch the trade do its thing, then you want to trade. What's it called? Trade what am I trying to say here? You want to trade, like, kind of swing it during the day, basically. And when you are here, when you're like, okay, what are you gonna risk? First thing you want to do is that, okay, I know that if price is gonna drop down because price drop from here, I know at least it's going to face a lot of resistance here in this area. And where is the best place going to face resistance from? This exact spot is where I would calculate. So I would say, okay, we have till 65. Till 65, so half of 65, because I'm looking for 2 hour only, right? Half of 65, we can say we can risk at least 30. We can say we can risk at least 30. If we go and risk at least 30, do we get stopped out? No. No, we didn't get stopped out. It literally stopped right there and came back down. But it's not as though I was showing you that we will not get. I'm just in case of you don't know where to risk because price is a little far. You don't know there's so many because yesterday there were so many highs, so many points where price rejected from you know where to risk. You can use literally the current day and be like, okay, price is here. Price here. Let's say you did not know that price would close here. The candle is forming. You can be like, okay, price. This is where we want price to at least retest, and then we know that price is going to come at least here. So 70, right? So we're expecting 70. We can go all the way to 35. Look for 70, and that's it. Like you don't need to stress about, man. All Jisha. We'll see. We'll see. We'll see. Same thing over and over again. You come to this day here. You come to this day here. You take your first trade at this point, maybe on the ES it was actually at this point. You take your first trade at this point, you know that you're waiting for price to retest here. Waiting for price to retest here, you know what's it called? You can get at least 20. So you can risk at least 10. At least 10 to make 20. Because on the way up, price didn't form much of a resistance. The idea is where is price going to really resist from? That's where you can hope to take profit. And so you want to risk enough so that it will be 2 hour at that point. That's all. On this fall, there was no resistance. So if there was some kind of long you could have taken here, you know that you'd have gotten at least 128 30 points. So you have like 50 points to risk. You can risk all with 50 points because you could at least make 100. It's crazy, man. It's crazy. It's crazy. Anyhow, I'm gonna spend time today. Maybe I'll even do it now. I'll just do it now. I'm gonna spend time. I wanna see the correlation between the Nasdaq and the MES. Actually, before I do that too, let me do something else real quick. What's popping? What do you mean? Ah. I'm about to back this. That's why I am. That is why I am still here, I guess. Let me check something. Top T. So the question is, do I want to? So this is my trader account. Let me crop it so you guys don't see my account number. That's the trial account number right there. So let me crop it. Yeah. What the hell? I mean, they all practice psych. What's popping here? Where that he did stop his lost limit? Where is it? Where is it? What are you talking about, bro? What are you talking about? Where is it? Oh, this? Wait, what are you talking about? This was a trial account, bro. I was just chilling. I was playing around with it. But I don't know what you're talking about though. I'm still trying to crop this thing. Top right, open PNL.
Huh.
But that's the equity. I was playing around with the account. I was testing different things, you know. I was testing different things there. But let me. How do I crop this thing? It's crazy. I'm trying to crop the top from the top side. It's not letting me. Ah, there you go. That's it. That is it. Now I can switch to my main account. You guys don't see every other thing. I mean, there's going to be the. You can see if I switch this to this. Yo, Jeff, look at this. Look at all of this nonsense, bro. It's crazy. It's crazy. It's crazy. Hmm. Maybe I can switch this to. Maybe I can put this down here. But now, if we have this, I guess when we put our analysis on, because my analysis, I'm still going to be doing it on the trading view. So the question is, do I want to have this and the trading view on at the same time? Yeah, I can't even separate it. So what we'll do is whenever I do my analysis, my trading view is always going to be my trading view, and then you guys can just watch this after, I guess. So we'll have two scenes. We'll have two scenes. Yep, that's it. All right, that's it. So let's go and do the announcement. So from tomorrow, we're going to be trading futures only, cause fuck for it. Cause I don't want to go through what I went through again today. It was horrible, very horrible. The spread is not good. All right, let's look at the correlation between these two here. All right, we still got to work out though. I'm not forgetting about that. So, well, I don't have gym workout today, so I can push my exercise till a little bit later. I've not even eaten the whole day. Anyway, that aside, let's look at today. On this day, whatever. Let's just look at the day itself. There's no prior analysis. um, Looking at the day itself, we had, let's say, 7:30 started. We come at 7:55. We put our line here. Want to see how price reacts here, right? So here, we'll say our line is here, right? Whatever. I wanted to copy it. So if we paste this here, we have this here, right? Is our line at that time. So coming in, wait for price. We have this kind of price kind of formed the base here, but then it went, and so with this we will not be going in. With this candle, however, price goes, hits the red line exactly, and then rejects. Red lines you can have because it's continuous. Hits the red line exactly and then rejects. It breaks the day's high, but it doesn't break this high. Because technically this is our base that we're looking for price to reject off of. So we have this point, price. It's not the prior candle wasn't the most bearish, so you could ignore this short and not take it. Honestly, you could ignore this short and not take it because it did break the high. Not only that, prior candle was not bearish, so let's ignore the short. And on the what's it called, on the Nasdaq, prior candle was also not bearish, but it didn't break the high, so there's that. If I was scalping, I wouldn't even wait for the candle to close. I would just have an order there short. Like if I was gonna be having an order there short, let's say this is the range that price has come to. We know that price, so we put it at the close. We know that price will come 15. Minimum at risk is 7.5, right? Minimum at risk. But if I see that 7.5 is right here, I might as well risk right above those wicks, so about 8.5 or even 9, looking for 18. That's technically what I'll risk. We don't get any of that. Oh, I guess we get 18, but 15 is, we don't get 15 here. So price even comes back to retest before we get 15. But there's no need to close your trade if you went in. All of that aside. Let's say we're not scalping. This is the only example of scalping I'm going to give. We're not scalping. But that was a scalp. And with scalping, you'd have expected for price to have some resistance here and another resistance here. It doesn't even get there before it rejects, so you probably want to get out of the trade around there. But as I said before, we're not scalping. Okay, so price is now here. We're like, okay, this base ugly. Don't really like the base like that. However, it's not too ugly on the Nasdaq though, but it closed inside. So we were expecting price to come here on the ES. Price pushes back down, and on the Nasdaq, funny enough, we're expecting price to come here on the ES, but on the Nasdaq, we're expecting price to come here because this week here comes into this, so it's basically like one whole week, and so it technically starts here. We're paying price to come here, and price comes there, reject. Prior candle was good. It's not a bad entry right there, right? So you will not have gotten the entry on the ES, but you'd have gotten the entry on the Nasdaq. On the Nasdaq, you'd have gotten it here. So you want to reach this low. So below the low, probably another 5 or 10. Let's say with the ES is 4 or 5, and with the Nasdaq is 10 or 8 or 10. So let's just say 10, so 45. Risking 45, looking for 90. You don't quite get 90. You don't quite get 90, right? 90 is up here. Because we expect price to go and break again, given that it already broke the high. So when price comes to retest on this, so we got in the trade on the Nasdaq. So you have to, since you got in the trade on the Nasdaq, there's that, but and then there's it's a little confusing. Well, I think I'm just gonna do my analysis on the ES, and then if the Nasdaq gets me an opportunity that's cleaner before the ES, because when this happens, this was the candle we got in on the Nasdaq. I probably will wait for another candle because I'll be like, oh, maybe the ES will come in. Or we could just get on the Nasdaq on that candle, whatever. So now this has fallen down. You will want to put your line here now at this point, right? Your line is now here at this point. Price comes, it forms another base on the way up forms a base right here, right? So it comes, it rejects, prior count is fine, next count is good, next count is good, next count is good. There is no short opportunity. It comes to retest this base, given that this is a base that formed. It's not a base with like rally base rally. It's a base as it just looks like consolidation. So you'd expect price to come and retest here. No, here for your long, because there is a disconnect between this week and this week. So you wanna let price retest here, right? For this base on the ES. So we get a pushback up. We get a pushback up. Now there's rejection. Now there's rejection. The bounce is happening. It's fine. Now there's rejection. You could force a short because we didn't, because you're expecting price come down here. So if that's your expectation and you're ignoring the fact that price could really continue from here, short, rejection, rejection, you could force a short given that, well, price is really rejecting. Maybe even at this candle or at this second candle prior. Force a short, risking, so because price has come in here, it's really rejecting. Force a short either here or here. So if it's here, you want to risk above the day's high, which is 6.25, probably above that. So for the candle above that is 7, so you could just risk maybe 7.5. But knowing that price is likely to break this high, you probably want to risk up there, to be honest. You probably want to risk up there. So, and when price, so 11, whatever, looking for 20, 21. When price does come down here, this kind of happens, but the prior candle is not good. You don't get an entry on the ES, and you also don't get an entry on the NASDAQ. So, given that I'm in long here, I'll likely hedge. I'll likely take that hedge for sure. I'd like to take that hedge, short, risking. I'll probably even risk. So, given that I just need price to get up here, which means it just needs to break this high, I'd probably just risk maybe, so I'm in down here, maybe even just 8 looking for 16, which I'll get 16 on the and I will break even on the, when this run happens, I will break even on the NASDAQ. So 8, break even on NASDAQ, get my 2R. This happens, we don't get a trade. There is no trade here, right? There's no pickup because you expect price to come here. Price does come to this point now eventually, but it didn't give us any entry. It's a very good candle though. You could force it, but it didn't give us any entry by my standards. And then volume comes in, we get a pullback. You could get in on this one because it came back to this week here. It came back this week here. You could get in on this one, risking this, not this low, so taking it down here. So it'll be something like this on this black candle, risking down here. Because you're technically risking really this low, but at least 5, blah blah. You just end up risking here 12. So we're looking for 12, looking for 24. You end up getting 24, I think, because price really moves up. And so on the NASDAQ too, it's also the same trade. But I would prioritize the ES trade over the NASDAQ trade just because I'm more familiar with the ES. So we got a short here and a long here. At that point, the ES is also pretty good. So, but the ES is pretty good and the NASDAQ is pretty good. So either one would have worked. And then price forms a base here, pushes up, pulls back to the base. When he pulled back, the NASDAQ was actually better looking than, because this was blue, I'd prefer a black candle, and this had rejection. So NASDAQ was actually better looking. If you took the NASDAQ an extra trade, use your low, you're risking 33. Behind that low, so 45 or 50 or 46, looking for 92. No, yeah, 92. You're never getting 92, so that's not a bad trade right there. Not bad at all. So that would have been profit on this trade, profit on this trade. But if you did take this trade on the NASDAQ, you'd have to put break even on your ES if you took it here. You have to break it because you can't take. You can, but I personally will not go long on ES, long on NASDAQ, and they are both open. So that means I'm now risking 20% of my account, because, or not 20%, but if it's on the funny account, so $450 per trade, I'm now risking 900 on that one trade, which is $1,000, right? Which is 3 times, because we have 4,500 max on that account, right? So 4,500 max, that comes down to 450 as 10%. So that's 10 trades per. Usually have like basically the way I did the number is I have maximum 4,500 to risk. And so if I risk 10% of that 4,500, then I have 10 trades to lose in a row for me to lose the whole 4,500. Like in a row. If I lose 10 trades in a row, then something in the hell is wrong with me. So that's that. So that's that. But yeah, so you could get in there. So on this day, you would have made 2 hour here on this short, on this head short, and then you'd have broken even on your first long on the Nasdaq, and then you would have made 2 hour on this one and 2 hour on this one. So about 900, and that's that's 2,700 on the day, right? It's not bad. It's just about 60% per se of your risk that you made. Whatever. So let's remove this. Alright, let's go to the next day. Remember this day here. Again, we're starting from 7:55 to trade. We come in. We're like, okay, so this week's gonna want to see price come into this week here, this particular candle here. It doesn't pull back enough, but prior to that, we want to see price. So this is 7:30 candle, right? Yeah, I want to see price, how price interacts up here. So honestly, I don't see why you're not going in short here. So this would be a loss, clearly. This would be a very clear loss, a very fine loss. So the risk, so the entry is here. You get this candle, nope. You get this candle with volume, and then you get this candle for continuation. So you definitely could take that trade, and that would be a loss, right? Because you'll be risking, your risk will be, so if it's up here, well, price didn't really fall. I even thought there was more behind, but price didn't really fall that much. But whatever, let's say so on the day you come in, and at the point you come in, there's no volume. So this is the first volume that comes in on the day short. Oh no, there's volume short. So anyhow, so you're supposed to risk up here above that 8, so might as well risk 10, right? So no, 8 plus 4 or 8 plus 5, 13. So might as well risk 13. So given you're risking 13, but 13 plus 6, so now you're risking 20 basically. So then you end up getting stopped out 20 down there. That's fine. There was no even long opportunities. You would have not gotten any long. Even on the what's it called, Nasdaq, you expected price to come back to this point at least. It still didn't come there. Rather, it showed more rejection to the downside. Interesting. These candles are vastly different. Here it's continuation short. Here is more. Don't know where it wants to go. Vastly different. Interesting. Very interesting. But yeah, so this has been a loss, and then your next trade given to there's this base here that formed. It's okay on the Nasdaq too, on ES too, something like this. And on the Nasdaq, it's the same thing here. This one's a little longer. We don't get a retest of the base on the ES, but we get a retest of the base on the Nasdaq. Very close. So you could have taken this trade here, long, right there, risking below the candle below the base, so risking down there. So risking 62, looking for 124. You don't quite get that, and that's fine. You notice there's no rejection on the way up here. No base, nothing is forming here, right? So you see that your best bet is to, what's it called, close your trade around there, because if price came down, given that this volume is there, your best bet is close your trade around here. Because price came down, next stop is at least here. So you might as well just close your trade. But hey, if you didn't close your trade, then it's obviously break even. I don't say that. But yeah, we get a pullback to the base. Even this base, so at least there is where to come, because that's where the base really is. So you get pulled back to this base, finally comes to retest this base, breaks through, and then we get a pullback to this kind of a base here too. This kind of a base, this is more like a low. Yeah. And then we get a little bit of a bounce and a continuation to the downside. There's only one entry, and that's on the ES. Actually, it's better on the ES. We know that there was volume that came in here, and here a little bit of volume came in, and then there was continuation. You could have forced the entry here, risking up there, but that could have been your hedge, I guess. Instead of so you're in long there on the Nasdaq, you could have hedged here, so risking above that. So 10 plus 5, so 15, right? That would have been the hedge there. 15 looking for 30. I think we got 30. 30 is just there. And after this point, I don't think there was a trade anymore. I don't think that we got an opportunity to go in long anymore. There was no trade here. Maybe if it was looking back, there was this point here, but we broke through the low, and this candle is not the best. There was this base here, right? But the series of candles that happened here, I guess there was a little bit of rejections on these ones, and then so this blue candle may be your end, because price did fall quite a bit, and you expect price to go down here. But hey, I guess it's okay to take it because this is a base, and after this base, it was pure strength to the upside, right? There's a base here, this base here, and after this base, it was pure strength to the upside. So it's okay to take this trade, right? And if you draw the same thing on your Nasdaq, it's gonna be here. It's gonna be here. Right? This is not a base to me, at least. It's too big. Or not necessarily too big. It's like there's supposed to be a base here, and then kind of really just broke out of the base. Like really thoroughly broke out of it. So they both rejected their base at the same time. I would take the ES. I would always take the ES, and I'd likely risk ES up there. I'd likely risk so right under the base, the candle around the base 16. Or if you're not to reach the low, it's fine. So to 20 looking for 40 or 16 looking for 32. Both worked. So when price came back up, this is a base for sure that you wanna watch. So because this base is kind of ugly, you wanna wait for price to get to this point here. This candle, not much rejection. This kind of good rejection, but prior candle is a little bit more bullish than bearish, right? So waited for price to get here. Good rejection. Next candle, hard rejection, but it's just a doji, like it's not a bearish candle. Plus this base is not the best, right? So you want something that is solid. If it comes here, solid rejection and solid weakness coming up to it. There was no weakness. This just happened, and then waiting for the next candle, we get a continuation. So after this base, we're waiting for price to get. So because these wicks all connect, you want to wait for price to get up here. So we get rejection. Prior candle does have rejection. Prior candle is weak. I mean, what's it called? I mean, this just went from here to here, but that's fine. If you did decide to take this trade, risking up here, so at least this point here, you could have either gotten out of a trade after this candle, maybe here, or you could have held your trade for a loss losing half of the money you would make after this trade closed, because this trade, even at 40 was just here. So if 40 is just here, well, whatever. You could always close the trade there, so you make half of what you would have made hedged, right? I don't know. I doubt I'd have entered this short though, just out of, I don't know. It just didn't seem right. Or either one is right, because for this one you'd have waited for price to get here on Nasdaq. On the ES, yes, it came pretty quick and it rejected, but on Nasdaq, that same candle didn't even reach here. So by the time it reached there on the Nasdaq, and if we took the hedge on the ES, right? If we took the long on the ES, we would have been waiting for the hedge on the Nasdaq, right? So if this happened, we're like, oh, we want to hedge the ES, then let's say we took it on this candle, we would have to risk all the way up here, right? We have to risk all the way up here. So that's about 86, or sorry, 87. And also, we know that our stop loss is really here for the what's it called, for the ES. So when this candle happens, which is what stops us out at 1325, that's this candle. We're still about halfway to our stop. We can just close the trade here. So instead of making half of what we normally make, we'll probably make like 60 to 70% of what we would normally make. Instead of 2 hours, you make 1.5, 1.6 hours. But I don't know. I don't know if I would want to even get in here, given that stop is all the way there. I don't know, but because technically we're supposed to wait for this week on the Nasdaq, and this week on the ES. Let's keep going. Let me see. Maybe we'll see some. From 755, we have this base here. Price really jumped from there. You want to jump in there at 755, and basically at 8 o'clock, going in long, risking below that. So that's the low you want to use, a 12 or 13. Looking for 26. You don't quite get 26, you get 24. If it was 12, you get 24. If it was 13, you get 24. 24 basically. You don't get TP. And this one didn't even reach the lows. So for the Nasdaq, you want price to get here, right? You want price to get here. For the ES, you wanted price to get here, right? So if you come to the blue line here, price got there on ES. You take your ES trade. It came up here for our short. Want to see how price interacted here, blasted through there. Want to see how price, after price blasted through here, and even here it didn't show rejection. We want to wait for volume to come to the short side before we set. So then when price came and retested here, definitely worth the trade, taking our long there on the Nasdaq, right? Taking our long there on Nasdaq, risking down there. So plus 10, so 46. We don't get stopped out. Even if it's plus 8, 44, we don't get stopped out, and then we get a move up to 60s. And for the next short, we have this base form, nice, but we want to see price interact up here. It doesn't get here, it doesn't get here, just starts falling. Well, that's unfortunate. That's unfortunate. It doesn't give any entry, and that's fine. And then what next happens? So at this point, we remove the blue line. We don't need it anymore. You don't see how price interacts down here. Base formed up here though, so technically price should be bouncing off. It could have even taken, oh, there's volume. Could have taken off of this low, right? So it broke the low, because that base is ugly. It broke the low on this retest. But if it was just the base, still like there's no trade up until here. But might as well wait for price to see how price, and then it breaks the base. So you might as well. I won't take this as a base. I'll just take it as a low, waiting for here, breaks the low, so you might as well wait till price gets here. It comes, it retests, looks good actually. Could take that trade and lose. Because after this candle, so you take a trade risking down here, 13 plus, so 13 plus 4, 17. So, but once this kind of happen and this kind of continues, I would want to get out. So I'll get out break even right there. Is the idea. But after this candle, you know that there is now short volume. And how does it relate to Nasdaq here? Hmm. Have a base formed here. Neither of them reaches the base. Alright. It was news, so this base is clearer than this. This base is kind of uptrending. This base is straight. I prefer this base, so wait for this base. Trade is right there. Does it break the low? It doesn't break the low. The base closes above too, so pretty clean trade right there. Base is up to this candle. So might as well just reach down here 30, looking for 60. Right? So that would have been that. Probably don't get 60. Oh, you do? Oh shit. Oh well. Got that here. Plus red line. But there's no trade though. Just break even. After this move, it becomes break even. And then, but now we have this base here. This low especially. But I don't really like this low, so I'm gonna ignore it. We have the red line. And then volume comes in here. Volume holds on the next candle. That's very relevant. And on this pullback that broke this base here, that same pullback did not break this base on the Nasdaq, and the volume came in and held still. It's not a bad idea to have taken that short there, that long there, but because you already break even on this one, so if you took that one, because the volume came in, red line on the, but it's a better trade on the Nasdaq than on the ES because it broke this base.
Oh,
I'm thinking maybe I should even. I was just thinking about it. I was like, maybe I should, because I have the option of using TradingView as my trading platform, right? So maybe I should use TradingView as my trading platform. That's what I was thinking about, because it's not as though the other platform does anything for me. And if I use TradingView as my trading platform, it'll be very easy to stream and not have to switch things anymore. But I do my analysis on the MS and the rest. If I go to the MES now, I wonder what it looks like. I mean, it's the same thing. It's the exact same thing. So let me see. It's the exact same thing. What is this? Damn. And why does it look shifted? Or maybe it's the indicators I have, or maybe it's the lines I have. What is the exact? Oh, why is one just shift? Yeah. Do I wanna? Because my analysis is on here. Interesting. Hmm. Interesting. Cause what's it called? This trade of it, guys. It's not easy to put a stop loss. It's not easy to put a stop loss. Hmm. Anyhow, maybe I'll just use this, guys. Maybe. I think it'll be interesting to trade on TradingView though. Interesting trade on TradingView. The trade of it, guys, were free too, so it was not a hassle. That's true too. TradeOver, they don't charge commissions. Is that correct? They're free, but I think they charge commissions. Oh, they charge commissions. Okay, that's cool. Yo, what the hell? I got my 20%. I was about to call them. I'm like, yo, you promised me 20%. That's the only reason why I joined. All right, let's go back to trading here. Let's continue to find some similarities. And then decide what we can deduce from all of this nonsense. I'm coming in at 755. You don't see a price and this happens. That's just rude. Absolutely rude. This is why this is why scalpers can just go and put this entry there. As long as you know where you want to get in, man. For this one, your base is here. You don't just get at the top, or maybe there, right at this whatever that is called. Well, I know it means something. So there, and then for the other day, get in there. You get in there, you get filled. This happens. You think it's gonna continue. Ooh, you lose. But you get in here, right? And you're risking 4 below this, so at least 10. So you end up losing. Oh, you're getting in there because this low. But you have to reach below that low. You're risking below that low, that's for sure. But you still lose regardless. But yeah. Well, you already took. This happens, you get in there. Oh yeah, for the first trade was this. Something was not adding up. So first trade was this. You get in there around, bruh. Around there, you're risking below that, so at least 10. Because you know, on the day so far, we've done up to almost 20. We've done 20. So you want to risk 10. Risk 10. You get a 20. I'm actually interested in seeing this thing. So we're watching this spot. We didn't get filled. We get filled here, risking down here. It's a good candle. Prior candle wasn't the best, but it's a good candle. We got it. Here we get filled, risking above. We get stopped out. We get stopped out break even, or we get in here. Here we get in, risking down there. Get in there. We get TP now because we get in lower. Get in here, risking below this one, so it's 25 plus 10, 35, looking for 70. Interesting. Maybe I should start putting my orders to get in. Maybe it's worth it. Hey, see me see wahala dey. Almost see danger wahala dey. See danger. Might as well risk 14. 80. Almost there. But yeah, so 36 is the risk. 40. Yeah, I'll probably be like, might as well just risk 40. I'll probably say that. 36 is the risk though. It's supposed to be a risk. Because it's the 24 plus 10. Alright, so 24 plus 10 plus 8 is 32. Probably risk here then 36. Looking for 72. Almost see danger wahala dey. Wahala dey. Wahala dey. Oh, wahala dey. Wahala dey. We know we can get 20, so risk at least 10. Yep. 11 looking for 22. Don't quite get it. But we get this one, profit. Don't quite get this one, and then we waiting. Next entry would have technically been here, risking down there. So we get in there. If you stomach all of this, then it works. Next entry is here. I don't know, man. I don't know. I don't know. I don't know. Should I do that? I don't know. I don't know. I just leave it as closed. Only scalpers will do that to this entry style, because they can decide whether they want to get out or not mid right after entry. Alright, my past is there, right? See now, like somewhere here would not have gotten in long, because if we put the entry here, would have been in long, forced in long, right? I would not have. But damn, this one really dropped. How am I getting in? Yes. That was rejections. How am I getting in? Yes. If I didn't get in here, there's no reason why I'm not getting in on one of these two candles. I don't know, the way I see it, it just seems, at least so far, you just watch both of them and you just take the one that looks good and the one that looks good first, kind of thing. But if they both look good at the same time, then you want to take the ES. And then there's here. But this was just a drop, one single drop, not that far. So after this, then there's here. The price drops here. There was this gap, you feel the gap, and then so this one is here still. It breaks all of this, but there's also this here. This holds though. With this holding, there's no reason why we're not taking a short on the Nasdaq. Well, I mean, we broke the high, but there was also these highs. Like, it's really held. This broke all of this consolidation, but this held this consolidation. See? It really held, so we'll probably have to risk up here after that candle. So it'll be something like this, risking up there. So about 30, looking for 60. And then by the time price came here, technically you're looking for how price reacts here, and then react all of here. So getting long here on the MES. Obviously risking down there at least 10, because we could get all the way to 20, so at least 10. But 7 plus 5 or 7 plus 4 is 11. So risking 11, get 22. I don't know what it looks like to me. Nasdaq and ES is just whichever one looks good. It's not rocket science. It's whichever one looks good. That's what it looks like to me at least. But let's see. Even this one was good, but this one, like I said, if they both look good at the same time, which it did in this case, I will be taking the one that looks better. Well, if they look the same and they I'd prefer to take the ES. But this Nasdaq does look kind of better technically, because it didn't break this low. It didn't come too deep into the lows. But if you're stuck with just taking this, it's fine. I say 11, looking for 22. And if you're on the Nasdaq, then it ended up being something like 46, looking for 92. About the same point. Then we get this base here. So technically I'll leave a price come down to this lows here on the ES, right? Then we know that price could definitely bounce off of the red line. We're aware of that. But ideally we'll leave a price come down to this lows here. So for the Nasdaq, we'll leave a price come down here. So when this happens and this happens, I probably get in here. Knowing that price can bounce off of here, I probably get in here on the ES, not on the Nasdaq, on the ES. Risking the low, so 1350. Ideally. Looking for we won't be taking TP, right? But at least we get in there. And then for the short, I don't think there was any prior, no prior there. So for the short, it's just, well, we get a pullback all the way back to this point. We get a nice rejection. This is where price bounced up before. You could decide to take your long from there if you want. You could have said take that, but if you're already in here before, then you're just kind of break even, right? You're already in here, you're just kind of break even, and you definitely want to get out after this candle, because there's no reason why that candle should be happening that close to the red line, that close to the beginning of all the moves. A candle like that should not be happening. I know the Nasdaq, it really came back to test the highs and rejected. On here, we were waiting for it to get here, it didn't get here. Rejected prior. Nasdaq, this is the, because this week intertwines with here, and it went down from up here down to down there. It's not the most, but you're gonna see how it interacted this week, and it rejected, but there was no prior rejection, so no entry. And it's already like 115 at 110 at that point, anyways. Coming in, there was volume at 630. Relative is still fine, so coming in, and there's nowhere for price to bounce off of other than the lows. So at 7:45, we get a pullback all the way here. We're kind of really waiting for price to come into this base here, right? That's what we're waiting for price to come. That's the only point price. That's what we're waiting for price to come to. So it came here at the same time, and both of them were ugly. Prior candle was ugly. Prior candle, so no trade on either of them. But you could have gotten in on the trade here at this black candle. So there, risk could have been below this. So maybe just that week there, 15, getting in there, looking for 30. Obviously you don't get 30, but so now you see price is downtrending, comes here, rejects. At this point, if you didn't already notice that it's downtrending, you would notice that it's downtrending. So you're in here, you're looking for, okay, where do you want to go in short, really? Because price is downtrending, where is a short opportunity? There's none, really. Maybe here, because that's where there's a short opportunity, you want to close your long and go in short. And if it's higher, then you want to hedge. If it's on the same spot, then you want to switch your position. So maybe here, but maybe here because it's downtrending, it's not broken any prior high, so you can take it and risk maybe 2 highs above or something. So it'll be like something like this, right? 25. If you look at it on the, so if you look at this here, we got in here, went up, there was no real short entry, rejection, and this candle here, and this had more rejection than on the ES, so it would be better for you to have taken a trade on the ES. Or maybe here on the Nasdaq. Even on the Nasdaq, there was lower highs all through. Lower high, lower high, lower high, lower high. Anyhow, you either close your thing break even and get in short, or you just close the break even. One of the two works. So there would have been no trades if you didn't get in short. And for your long, price came here, gave us this move from literally this low, right? So when price came back to that low, did it break the low? It broke the low. Don't like that. Broke the low literally on this candle. Did it break the low? It didn't break it. It didn't even get there. So just forget about it on the Nasdaq. But on the ES, it broke the low. Don't like that. So after we see volume came back in here, pushback, and then volume came in here. By this point, it'll be too late to join into the trade, so there'll be no trades here either. No trade there unless you force this particular candle, but you don't know, the next candle may have been bearish, so may not have wanted to force that. And even if you did, what's the point? What's the point, eh? Gotta work out, man. Ish. So hungry. Not eating the whole day, and I still have to work out right now. Hmm.
Ah,
I say no more. You know me, I'm always ordering my food, so I can't relate. Well, good luck, man. Good luck at the market, sir. Good luck at the market, sir. I'm still thinking here. I still gotta go work out. Don't forget to work out, Jeff. I wonder when was the last time you worked out, bro. When was the last time you exercised? Huh? Huh, Jeff? Huh?
ah, ah.
Damn. Damn. Jeff, I worked out every day, Jeff. Every day. For that 2 weeks where you weren't doing shit, I was working out every day, exercising 100 push-ups. Actually, it's 120 push-ups, 120 sit-ups, 120 squats. And then I added 15 minutes of skipping rope, bro. And you're out here not exercising, Jeff? What are you doing? What is you doing, bro? What are you doing? How dare you? How dare you? Ugh. Disgusting. Gotta work out, Jeff. Gotta exercise, bro. Anyhow, so let's look at this. I was kind of blanked out there. So coming in at 55, no volume at 60. Maybe just news. There will be a news. Maybe 14. But it kind of died right back down. It kind of stayed. So let's say we came in early, watching. We're like, okay, price came here. Yeah, I know David
Ah,
Goggins. That guy is a beast, but I think he's overdid it. He's overdone it all. I don't think he needs to do that. It doesn't. There's no benefits really. But hey, the fact that he came from 300 and something pounds, I think it was, or 200, no 300 something, and it came down to where he's at now. That's a big progress. But after he got to where he's at, like he didn't still need to keep the things he did, even to get there. The things he did killed his body a lot. He overdid it, but uh, hey, he's still going, man. You gotta respect him. That's all. All we have for the guy is respect. That's all. We will not necessarily emulate everything he's done, but we will take the goods. We'll take the good and filter it. Take everything he's done and filter it and keep the goods and use those. Because in the end, no matter what man does, man will never be able to fly like physically. I mean, hey, they say never until it happens, right? At least for now, it doesn't seem possible biologically. But hey, you never know. You never know. So there was this run here. Came in, pushed up 630, pushed back down, broke that low. Here now it broke this low.
Oh.
Nah, of course I have too much respect to be joking like that with David, bro. Can't be joking like that with David, you know? But hey, that joke did not come to my mind. Maybe I might have said it if it came to my mind. But yeah, I didn't come to my mind, man. Can't be on my level. Can't be on my level, you know? Well, yo, every day that I have to do my push-ups, sit-ups, squats, while I'm doing it, at some point I'll be like, damn, I wonder how people do this every day. And at that moment, I answer myself, and I'm like, the exact same way I'm doing it right now. Nobody really wants to do any of this shit, but we do it because the benefits outweigh the pain that we go through, you know? You get a good body, you get a strong body, you feel confident, and then if you stay consistent, it creates discipline. There's a lot more benefits, both psychologically, physically, mentally, to sticking to exercising or martial arts or sports. Just sticking to something physical and being consistent with it. A lot of benefits come from that. I'm going to start swimming this weekend. But yeah, a lot of benefits come from that in every shape and form. So, and it takes me less than 45 minutes to complete all of my workouts. So about 15 minutes of skip rope, and then less than 30 minutes to do all of the 120s, right? It's cold. I'm in Canada, so it's pretty cold. My windows are closed.
Oh.
My windows are closed. I don't have the heater on, but it's very cold. I mean, not very cold. Right here, it's probably in my apartment right now because I don't have the heater on. It's probably, you know what? Why am I even giving my power? Can I just check the weather, bro? It's minus 23 degrees in Edmonton right now, and it feels like minus 31 degrees. That's what it is. That's what the weather is. But I don't have my heater on. So in this cold, I'm out here not wearing any clothes, just my boxers, and I'm just skipping. I'm sweating. To sweat in cold while basically naked is different, bro. It makes me feel like I'm putting in more work than I should. It makes me feel like I'm putting in a lot of work. When in reality, it's just because if the weather was hot, I'll be sweating more, right? But to be able to even sweat in the cold, it's nice. It feels good. But yeah, man, it's hard every day, but we still do it. To do it regardless of whether it hurts or not. That's what it's about. But it's hard, man. Sometimes I just don't want to work out. I'm just like, man, I'd have to do it today. I've been doing this for 2. I can just skip one day. Let's just skip one day. The moment I skip one day, the moment you let yourself skip one day, come on, man, it's 45 minutes. You keep going and you just start and keep going, and it's 45 minutes and you're done. And then you cry again the next day before doing it. But the moment you skip one day, you're gonna get lazy, and then you're gonna be like, well, let me just add another day. It's just rest. My body needs rest, alright? And then you add another day, and then man, I'm a little tired today. I don't know, I'm recovering. I'm still recovering. Let me just add another day. And then you keep adding days, and you never get back to, you break out of that consistency, you know. You don't want to break out of it. But hey, if your body actually tells you to rest, then maybe you are overdoing it for where you're at. And if you want to keep working out every day, you can reduce it. So that's what I did with my gym. I was going every other day, but I prefer to keep doing this push-ups and sit-ups every day. If I had to stop the gym, I'll stop the gym. It doesn't matter to me. But I still wanted to do the gym, so now I go to the gym every 3 days. So I still have the energy to continue doing my exercise every day. So I just switched it up. So what I'm saying is, if you're doing something every day and you want to keep doing it every day, but the quantity you're doing right now is too much for your body to take, then you can reduce the quantity, but focus on trying to get it back up to where you were, or back up to standard per se, back up to something that is meaningful to an extent. But even 20 push-ups a day, 100 push-ups a day is standard, honestly. Like, why can't you do 100 push-ups a day? Just think about it. Just think, you have the whole day and you can't do 100 push-ups. That's crazy. Anyhow, let's go to this. So let's remove this. So we're seeing something here. So this lows here. Got that. Imagine just getting in right there. Crazy, literally. Like, there's no reason why an order should not be there. But anyhow, that's not what we're here for. We have these lows starting from here. So we already got a bounce off the low. So I don't think we'd want to use it again. So when we come 7:30, price bounces. Want to see how price interacts down here now. But the bounce was not even that much too. So like, why are we taking this trade? So then we'll wait, and definitely want to see how price interacts here. We don't like this low, but we like the parallel. So want to see how price interacts there. And when price comes there, nice rejection in there. We're risking down there. Very, very simple, easy trades, man. Simple and easy trades. Taking a trade on the MES. Goes up, waiting for price, see how price interacts up here. As it's going up, want to see how price interacts here. Very nasty rejection though. Very, very nasty rejection. So let's see. So we're in long on the MES. Price comes here. Very nasty rejection. Let's see how it looks on the ES, on the NQ, MNQ. How's this candle? We're waiting for price come. Whoa. Where will price get here? Where will price to get here? No. This drop was this one here. This blue. Oh, so it was here. So I guess we could have taken the short there, actually. Could have taken the short there on this candle, this blue candle, after it got there. And then so either this or this. So either one of those candles, and then we'll be risking. So for that one, we'll be risking. So we have this high that we're using. So above all of these wicks. So maybe just right there, 31, right? And yeah. So and then price does this, pushes back down. Honestly, I'd want to get out of this trade. I honestly want to get out of the trade. That's just me though, but I'd want to get out of the trade. I'd want to, because price is showing a lot of, it's looking like forming a base and a lot of buying around the lows here. And for the what's it called, for the ES, would have been waiting for price to come down here, and which it did and rejected, right? Because this was a base. This is a base that formed right here. This is a base that formed, but this base kind of connects with this low. So ideally, you want to see price come down here. Even up at this base is not a bad point, but I would not add if I'm already in down here. I would wait for price to come down here. Very good rejections. I'm even trying to get in another long here. Oh yeah, another thing with the what's it called? With the futures trading, I'm only going to be trading 5 contracts, like 5 contracts at a time. So in case I need to hedge, so I can hedge with another 5. And then if I need to add after hedging, then I can add another 5. Like in this case, there's 3 trades. So I'm in long, I hedge here 5, and then here I add long another 5, right? So this long here, adding another 5. risking below. So this is the base, risking just down here, so risking 10, looking for 20, right? We don't get 20, that's fine. But that would give me cause to close the short. Or if we don't close the short, we lose that, but we do get this one. I think we get this one. I'm not sure. So we have this low here, at least 10, because all the way up here is 20, right? So at least 10. We get 20, 20 is here. Yeah, so we get 10%. So we still get our 1 hour. So it's for the 450 here. 450 here lost, 900 here profit. And then this will have it as break even when this happens. And we will re-hedge right here because we waited for price to get around here, rejection. So then we'll re-hedge here. Re-hedge here because we're using this high now, risking at least 10. So might as well just risk there. So 11. Looking for 22. Basically get 22 down there. So re-hedge there. And so this long, we break even on this long on the MES. And then we retake this down there. We take our profit down there for. So then that will be 900 plus 450 on the day, basically. Days that consolidate are a little nicer to trade than, or it gives you more opportunities than days that just trend. That's all it is, really. Yeah, so I'm in long here, so the hedge would have been here. This candle. So at this candle, because this is kind of a base here, right? So above the base, so might as well just risk there. 40, 45, looking for 90, which we get. Pretty nice. And then this point here, we come for retest. Looks good. Look at how good it looks. You can even kind of want to use here. So you're using here. This one looks good. Take it on the blue candle if you want. Take it long. After getting out of your 90, take it long on the blue candle. What is 130? Is it 130 or 125? Yeah, probably not trade. Probably not trade. Since it's 120, probably not trade. But that's the trade right there. That's what we're expecting today. But it didn't come to the point. It bounced off of somewhere here. And that's fine. So I'm risking down here 20 plus 10 and that 30, looking for 60. You'd have gotten 60 if you took that trade. But hey, that's not. And also remember there's a base here, so there's a base here plus end of day. I'll probably not take a trade. But then after the day ends, I'm like, oh shit, I should have taken the trade. Oh my god. Oh my god. Oh, even price. Wow, price broke this low a long time ago. Let's see what happens when price came to retest this low on D. So there was no trade here. This was okay. These are 7. These are 745. No, but we're waiting for price to go low. That's for this one, but for this one, price already broke. Oh, price already broke. Why am I even? Price already broke that one, so we're waiting for the ES. I don't know. Why am I even stressing? Anyway, moving on. So on this day here, price is now out of all of this. We don't know what price wants to do. So coming at 8 o'clock, basically. So price has done this move. Nice. We're waiting for price to retest here. It's a very good retest. So we could have taken at 755 to be very honest. Taking at 755. So you know that you can get at least you can get like a good 10. So you're gonna reach at least 5, but you're gonna risk about 4 under this. So risking 8, looking for 16, right? You get 16 there. The idea is you have to risk at least 4 on that if it's the only low there, just in case price wants to push further. If you get stopped, that's fine, so it doesn't matter. And then so we have this base here, right? And then price comes to retest this base. Good rejection here. On this point, this is the base here. We break the base actually. So this is the candle we got in. This candle we get in. Price retests this base. Gets to the base, actually pretty rejecting. Even the Nasdaq too gets to another base up here, which is this one up here. So they are both at resistance. They are both at resistance at the same time. That's not bad. Not a bad trade. But yeah, this is where you want to get in short because prior candle was also good. base up here, risking up here, so you can get 16, so you're risking up here, which is about 8, so you get your 8 looking for 16, right? I didn't even know you got 16, but anyway, now you're waiting for price to come down here. By the time price is coming down here for the Nasdaq, you're waiting for price to come down here because this is the week, so this is where you're waiting for price. It came down here, it doesn't give you any entry. Price comes down here on the ES, it gives you an entry right on this candle. So you're getting long again. Risking this low, so the candle before that is this one, so about 8 again. Looking for 16 again. After this base, you could expect that price would break, but I would not expect this candle, but I'd expect price to break this high. I may just hold this, but you never want to see how price interacts up here. So where price pops and then gets up here at this point. So now price is approaching this base here. You want to see how price interacts at this base for the Nasdaq, right? But for the Nasdaq, this base is not the cleanest though. I don't really like it like that. So you want to see how price interacts up here. It does approach there, but it's not the cleanest. I don't like it. It doesn't have breakup structure to the upside on the base here. Well, this whole thing is a base, so if you wait at this point, you can see how price interacts here. It gives you an okay entry. Could have gotten in short hedge there. And once this candle came in and the next candle was good, just get out of your trade, you know. And there's a red line here too, so it makes sense why price was stopping. So you could have hedged at this black candle here or the prior candle, one of the two. And you get this mobile, you get out of trade here because that candle is continuation of this volume. So, and it makes sense that the price will find volume anywhere inside this candle. You found it here, continue to the upside. Yeah, or you could have not, you could decide not to even get in your hedge or whatever. You just close your long that you got in here. But yeah. And then see, price doesn't break this low here, which makes sense. Anyway, but then you have this base here for Nasdaq, and then you have the base here for the, what's the time here? 120. Yeah, probably not taking it, but you have the base here for Nasdaq, and you have the base here for Nasdaq. Price comes here, it doesn't really give you an entry. Right? It doesn't really get there. And then you have the base here for the ES. Price comes there, it gives you an entry right there at 125. Right there, 125. Risking below, so there, 1050, looking for 21. Not a bad trade at all. Again, there's a base here, so there's a base. This is the second day that it actually worked. The first day too, price was consolidating and it gave you that. Yeah, not bad. Oh yeah, there's a base here, so you expect price to interact anyhow there. So after the candle, you might as well just at 140, 140, 150, 155 when you close your trade, right? So at 140, you want to just put your stop at break even because you don't know where price wants to go really. You are at the mercy of the whims of price. Coming here at 755. Coming here at 755. See this base forming. Nice. You know there's some kind of move from up here. There's a base here. Pulls into the base. Low is down there. Below the base down here. Took the trade there. I don't know why you would, but because there's a base right there. But if you did take the trade there, knowing that you could get it, because you expect the price to break this base, so sure you have 10, but ideally you have 20. So you want to risk at least 10 to be honest. So 10. If I'd even risk 11 or 12 right under that black candle. 12. But hey, and then you'll have a chance to get out breaking. But if you don't, then well, oh wow, you're on your own. You had many chances to get out. If you risk down there, you had many chances to get out. If you risk here, 10, even if you risk 10, I think 10 was here, right? Getting at this black candle. 10 was here. Okay, so you get stopped out on this candle if you reach 10. Or if you reach 12 or 11, like I would, then you would still have a lot of chance to get out of the trade. But if you waited to this candle, then you would not have taken the trade at all because price broke the base, right? So after this here, there's this point here for, and then there's this point here for the ES. There's this point here, and for the Nasdaq there was this point here. Right about there, that candle. Price doesn't really get there, but bounces prior. And for this one, there is this base here. So price gets there during the same time, so you might as well take that. ES makes more sense. The ES there, it's going below the base, so about 5, but risking at least 10. So might as well just risk the 11, looking for 22. You don't quite get it because price now comes here, but you find it, you probably hedge here on this candle. So price comes here, price comes to this base, so you got in here, price comes to this highs here, rejection, not much rejection, but good rejection here. Probably want to hedge at that blue candle there. Hedge at that blue candle risking above here. So in this case, you'll be looking to make one or two. This would be break even, or which will be here. You break even here, or you take profit, and you only take 1 hour. So your risk will be above, obviously, this let's say this whole base there. You want to probably risk at least, because it's technically high, so maybe just risk here. So let's say it's here 25, yeah, 35 is fine, looking for 70, and you get that. So you get break even and you get 2 hour. And then price comes down to this point here. For this, price comes down to this area here. But for this, price comes down to this point here. Doesn't give you an entry on the ES, but it gives you volume, and then it comes and gives you an entry at this black candle. Ignoring that first, let's see if we got an entry on the Nasdaq. Nope, no entry either. So you'll be taking the ES. Oh, well, price broke this one, so you're not going to enter for the Nasdaq, for the ES, sorry. Price broke that one there, so probably be entering for the Nasdaq instead, because the Nasdaq came to these lows here, which had its, we don't like this low, but we don't mind this point here. But we don't expect price to break the low either, so it doesn't break the low. So it found volume there, and then so at the black candle rejection, that's where you get in that black candle rejection, risking the lows. Probably be this one here. And I think the candle before is this one here. So it's something like this, risking this candle. So about 40. Let's just say it's 40. In at the black candle, looking for 80. You don't break even. You end up getting 80 at the end of close to the end of the day. At 125. But prior to that, as price is going up, we found this low, more volume, it pulls back, breaks this low. So we're not using this low anymore. We're expecting price to pull back to here. For this one, it pulls back, breaks this low. We're expecting price to pull back to here. So we get an entry now here on the ES after all of this. So we get an entry here. Either one of these two black candle works. And so we're using this low, which technically might as well use. So given that you can get 20, might as well use. So we definitely might as well use 10 looking for 20. So we'll probably add our entry here and hold this one break even, right? And then we end up getting 900 on this trade. 900 times 2, I guess, so 1800, whatever. And prior to that, when we get in here, we'll be expecting price to come here to see how price interacts up here. We get rejection here. The price has formed this base. This is the entry, right? It's risking 10. We get 20 before. So price comes here, good rejection, but it breaks this base on the ES. It comes here at the same time, comes here. It doesn't break the base. Oh, it does. So since it broke both bases, we just let it be, waiting for price to get here now on the Nasdaq and here on the ES. It comes here, good rejection. It comes here, not very good rejection on the, oh, I guess this candle is not bad. So we're in on both long. Actually, at this point, we would have closed both, and it's 110. Question is, would you want to even trade again? It's up to you. But if you do decide to trade, then it would be, I'll probably take the ES then. Take the ES over this high, so might as well risk down there. You're risking at least 10, might as well risk this high here, just this week here. If you're lucky enough to reach this week and not get stopped out, good for you. But I'd probably stop at this week. Maybe if I'm probably this week. Again here, this is the higher risking above there, but the wicks kind of connects why I'm risking this week. So probably 14. You get stopped out regardless. But after this candle, remember there's a base here. It came to the base, and then this candle. I said it on the last stream that after candles like that, I would get out of my trade for a little bit of loss or whatever it is. I'll get out of my trade. So get out of my trade there. So instead of taking the whole 14, because I believe price is going up. So if price is going to show volume to the upside, I might as well get out. So take 3. That's less than 1%. I think I'm gonna have to leave it here, man. I'm gonna go. We'll start trading tomorrow. Start trading on the futures tomorrow. Again, today's trades very simple. Same thing that I've been doing in all of the back testing. We waited. There was no news, so we waited. Tomorrow there's news, so oh shit, look at the price. What happened here? Oh, this is what it looked like on the Nasdaq? Damn. What? Holy shit. What? That's what it looked like on the Nasdaq? Oh my god, that's just rude. What? What? Damn, that's crazy, yo. And so on the day here, looking at the ES, 7:55 is when we cared about starting to trade. So we're waiting for price, see how price interact. Actually at this lows, because it did go up quite a bit, not too much. It did go up enough for us to watch these lows, and then after these lows, then here it went up enough for us to watch here, right? So when we watch here, this broke the low. That's why we're like, okay, why are we even trading this anymore? And then on the Nasdaq, same thing, it broke the low, so no trades, at least. So no trades, waiting for volume to come into the long side. Volume came in here, volume came in here, so volume came in here. So there's volume now, and then we're waiting for price to come down, and then we realize that okay, price may, what's it called, may bounce from here. We got in our short here because we're waiting for price to come to this point here. We came to this point, got in our short, risking above. So we're risking that. So we know that price at this point, price can come from here back down to here, which is about 13, and plus price is downtrending, so you can definitely go to 20 if price worked. So we're risking at least 5 first of all, and then so above there, so we're risking 8, looking for just 16, right? And so all of this happened, price pulled back down, and then showed rejection here. We didn't stop out here, even though price showed rejection here. We waited for this candle. When this candle happened, we got out on the next. When this candle happened, it was rejection, so we waited for the next candle. Next candle had rejection on the opposite side, so we got out on the next candle. This candle here for break even, and then this candle happens. We're like, okay, that's interesting. And this volume kind of happens, so we're supposed to get in here. Getting in here now, respecting that okay, price looks like it wants to use the yesterday low and the red candle for. So we're supposed to risk 8, looking for 16. We didn't quite get. We didn't take it today because of spread. So there was 8 looking for 16, and then after that, we were waiting for price to reach at least this area, this line here. Price reached the line. It was rejecting pretty nicely, but there was a base right here, right? So and then for this, we're waiting for price to reach this line here. So we didn't take this because of the base, and plus we're in a long. We're fine to an extent. Because of the base, but if we did take it, then again, when bullish candle comes in, would have closed it here for a little bit of a loss. But what's it called? So if we did, like I said, if we did take it, and actually even once price broke on this candle here, we might as well just close the trade. So we'd have closed the trade for a little bit of a loss, a little bit of a break even there. Actually, break even there. Given that there's a base here and price is pretty bullish, that's the only reason why I'm closing the trade. And then we waited for the Nasdaq. Nasdaq came in. We got in long. Should have gotten in short there again, and then for that one we would have been risking 15 off the bat, probably 15. But given that we know that price will probably come here, we could have risked more, so 35 maybe. But risking 15 off the bat because of the prior day is up here, so risking above that, a little bit above that, so 15. If you wanted to risk more, 25. If you wanted to risk more, but 15 would have probably been my first trade, which it was. And so 15, we're looking for 30, which we get on this candle before it pops back up. And if we're risking more, maybe 25, we still got 50. If we're risking a little bit more, we got 60 at 30, right? So again, if you're risking here, which is 25, you still got 50 before price came back up. If you're risking here, you still got 30 before. And if you're risking 30, you don't get stopped out, blah blah. You still, but yeah, you're getting on this trade. Oh, I guess you get in, but price didn't. What's it called? There was a base here though, so you could have easily gone out of trade here too. You could have easily gone out of trade here. You're following everything religiously. Then you got out of your long here. You could have as easily gone out of your short here, because I was more bullish on the day, to be honest. So you have gone out of a short here on this blue candle because of the fact that um, there's momentum to the upside. And then when volume came in, there was rejection here as much as there was bullish price action here. And the next candle tried, but rejected a lot too. So you could have gone in short on the next candle, risking above that, looking for a move downwards. But yeah, that is it. And well, I'm just gonna stop the stream here. We'll see tomorrow. We shall see tomorrow.